Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, August 16th, 8:50 a.m. I'm late today by 5 minutes, but I want to say thank you. I want to say thank you to everyone who joins this Market Open. Now, why do I want to say thank you? I'll tell you, and that actually will explain why I'm late today as well by 5 minutes. One of these, Broccoli Bob says, new start time around 8:45 a.m. All right, here's why I want to say thank you. I woke up today with the meanest headache that I've had in a long time, which is partly why I'm late, okay? Even though I set the time for 8:50, so technically I'm not late because I adjusted the time, so it's like, technically I still keep... I woke up with the meanest headache, and I have not woken up with a headache like this in a long time. Like, I woke up and I was just like, ow, like my head, like it's aching. Like, I have not had a headache like that. I think I haven't had a headache like this in a year. I wouldn't say it's a migraine and it was that intense, but it was hurting. So I was sloggy all morning, getting out of bed. I was just like, then Steve called me and the phone starts going off and I pick up the phone and he's like trying to tell me some stuff. And I'm like, my head is like aching and I'm like listening to what he's saying. And I'm like, all right, yeah, makes sense. I'm like, and my head's just hurting and throbbing, which is why I'm late. And then, I kid you not, bro, magically, 8:48 a.m., basically 2 minutes before I go live, headache's gone. Gone. Didn't drink any water. Didn't do anything. Headache's just gone. Just don't even feel the headache. Why? Which goes back to why I'm saying thank you. I think when it's time to start the market open, all the issues just disappear health-wise, if I'm like groggy in the morning or whatever. And it's just like a dose of energy, dopamine, as I'm Beneficial says, you need us. And then boom, we're ready to go. Like, I legit, my head's not hurting anymore, bro. Like my like the headache that was like annoyed about for the past hour is gone. And at 8:48, I'm just like, dude, am I ready to go? Like, I'm just like, because I thought I would be a little groggy even getting up into the open, right? Like, I would not have a really big good morning because like it just hurts when you talk very loud and your head's hurting. Nope. I'm good to go. And I think that's because the energy you guys give me keeps me going. So thank you everybody for being here. We got a lot of stuff to talk about on the market open. We will have TJ join us at about 10 a.m. and TJ will give us the rundown on what's going on in the public portfolio. We made some moves already yesterday, so we'll talk about some of those moves and we'll see how that's playing out. But in general, this is a Friday morning, which is Palantir's a miracle drug. Exactly. Palantir's been holding 30 all week. This is a Friday morning after one of the best days we had in the stock market. Palantir's down 1.49%. Everything's kind of down in the pre-markets. I don't think there's any macro data besides housing sales, which were low expectedly because rates are still high, which is causing the markets to be a little bit down in the pre-markets. But realistically, the reason the S&P is down 0.5%, the reason Nvidia is down 1.5%, the reason Palantir is down 1%, QQQ down 0.6%, it's because they've had one of the best weeks they've had in 2024. Definitely one of the best weeks they've had in August as we've rebounded from the August 5th collapse that has led to basically a massive buying opportunity for investors. So, if you look at the S&P right here, 550, just insane, bro. Yesterday we hit a top of 553, 550 on the S&P. It was at 507, all-time 565. It does seem like as the macro data continues to support, and what is the macro data that continues to support? Retail sales data, unemployment data, and CPI. Maybe we get a chance to get some more momentum. The yen is up. That's why stuff is down a bit too. Yeah, that is also another reason. I really do think though, like, people are going to take some profits today. We could still go and have a very green day, but after a face ripping day like yesterday, like just unbelievably face ripping, dude. Yesterday was a green day. We were struggling to find the red. Like, literally, we were going through the watch list and like, what is red today? Usually, see a little bit of a sell-off going into Friday. Money market data came out yesterday. People added $28 billion to money market funds. So again, the money market stash, I think this is bullish. It's increasing to the highest level it's been in history, 6.22 trillion. Eventually that money will probably leave the money market funds, and not all of it has to leave, but even, 300-400 billion of it leaving injects a ton of liquidity in the capital markets. And that's going to happen when rates get cut. So I think the question now going into the next part of August, which again, it's kind of crazy. August is always green in an election year. That's kind of wild, right? August is always green. So although August started out as like one of the tougher years or one of the tougher months this year, it kind of historically for the past 32 years during an election year, it tends to end green, which makes sense why we're green right now. Not only because of all the stuff that has happened over the past couple of weeks, but just usually you see in August that recovers going into election season. Now, September tends to be bad, so we'll see what happens in September, but August does okay. So the August 5th collapse that we had has not impacted the broader month of August. It impacted the first week of August. Now, we still have 2 weeks left. We do have Jackson Hole, and that's another reason August tends to be a bit more green, because in a presidential year, the broader market is green, so the Fed is, it just happens to be a bit more friendly to the administration, and whether that's lowering rates or doing some type of stimulus, and them having Jackson Hole, which they're probably going to signal, hey, rate cuts are coming. That is probably something that the market's going to be excited about. Maybe that's a sell the news event because that's already baked in, but in general, I do think the markets want a little bit more of a confirmation by Powell explicitly. Now, a couple things on the Fed stuff. So UBS said, we expect Fed Chair Powell will lay out a case for an orderly withdrawal of monetary policy restrictiveness in a speech at Jackson Hole Friday, August 23rd. That'll be the day of the speech. And by orderly, we mean 25 bips rather than 50 bips. We expect 3 25 bips this year, September, November, and December FOMC meetings. And then we had Austin Goolsbee, one of the Fed presidents, said, when the labor market starts to turn, it tends to worsen quickly. Some leading indicators of a recession are flashing warnings. You could indicate that he thinks a recession is coming, but what that broadly means is that his argument is, hey, if we're seeing some indicators that can compound very aggressively, especially when unemployment starts ramping up, that means a recession is on the way. Therefore, implicitly, he's saying we're probably going to cut rates to help against that recession. So from a macro perspective, I think I'll get to the housing data, but nothing too crazy this morning. Yesterday was the big day, and the data was good in the context of retail sales and jobless claims, which has led to the rally that we saw yesterday, and we're going to see if it lasts throughout the rest of the next couple weeks. I went to Meet Kevin's live today, and they are so bearish. So I watched Meet Kevin's video yesterday. If you haven't watched his newest video, and he does admit for the first 20 minutes of the video that the data is very good, and that's why it's hard to be bearish against the data. However, his long-term view is still bearish. So by the way, he's completely out of Nvidia, completely out of Tesla. I thought he only reduced by 2-3%, but yesterday in the video he confirmed he's out. So long-term, he's still bearish, but short-term, he said the data is very good. And I guess we'll see in the next couple months, if we do retest the bottom or September or in September, or if the 507 bottom on the S&P ended up actually being the bottom. Rocket Lab is up 5%. Yeah, this one's doing good. Does anyone know why? I kind of didn't see why they were up. I did see they were up 616 in the pre-markets. At one point, it was up 9%, I think, as well. So this one's doing great. It was up 12% yesterday, 5% today. Well, one of the reasons might be ASTS. This one's down 3% in the pre-markets. It was up 50% yesterday. It's not the same as Rocket Lab, but satellite, space, all that stuff, you could kind of bucket them together to an extent, even though they're still different businesses. Maybe Rocket Lab's catching a little bit of a bid from ASTS that had massive momentum yesterday as well. So that could be possibly one of the reasons. Space Sentiment. Yeah, Space Sentiment. They got upgraded by Citibank yesterday, though, right? If they got another upgrade today, then yeah, the upgrades are starting to come out a lot more aggressively. So that's what we have right now in the context of the macro. You're addicted to the market open. Yeah, dude, legit, I had a headache, bro. I have not had, when's the last time you guys have had a headache? Like a real headache. You wake up and you're just like, oh my God, my head. It's like, I've just not had that in a while. So Chad, this is such a lie. He cheated and started drinking coffee again. Dude, I don't even know how to drink coffee. I don't like coffee. I like lattes, not coffee. But no, I don't know, dude. I think what it is I don't know. I don't think I've been getting enough sleep this week. That's really the thing. And I probably just and I said yesterday after the market open, I would sleep and take a nap because I really didn't get a lot of sleep last night. But then after the market open, I just kept working. So I just didn't sleep. So I think usually on the Saturdays, I get a lot of sleep. On Saturdays, I wake up at 11 or something. So I tend to sleep in on Saturdays, and that makes up for some of the sleep. Okay, so here's a stat that I want to show you guys. And this is a stat that no one could believe yesterday. and I had like 15 comments being like, hey, where's the source? You can't just say this. Where's the source? The source is legit. There's a real source, but the news was so unbelievable that people like needed a source to justify that it was real. I'm not going to lie. I needed to see the source too, because this was cool to see. And there's a bull and bear case of this, but we'll talk about it. JP Morgan yesterday. I don't know how we missed this yesterday, but we missed this. And no one messaged me about this. Usually I get a message when they mention Palantir. No one messaged me. So I had to find this myself. Retail traders have bought the dip to the tune of 1.8 billion, with 1.3 billion of that money going to 4 names. Tesla, obvious. Nvidia, obvious. Microsoft, obvious. And Palantir. So they put Palantir in the same bucket of those 3 big tech companies. And the reason everyone wanted to see the source was because no one believed it, dude. Like, no one believed that retail's buying the dip on Palantir. Because we know Palantir's more retail friendly, but to put retail or to put Palantir up in those 3 names as like the core names that be like, imagine so the video I did on Wednesday was about the normalization of media with Palantir. If Palantir keeps getting up there with these types of companies and you're grouping them together with the Nvidias of the world, I mean, dude, the brand sentiment on that is dramatic. So here's the source right here. CNBC was summarizing a JP Morgan report. And so small investors are buying the dip in old favorites such as Nvidia and Tesla, as well as scooping up the dip in Chipotle. Tesla, Nvidia, Microsoft, Palantir were the 4 names that got a lot of momentum. And basically the whole point from JP Morgan is that retail is buying the dip. So what do you guys think of that? Because I'll give you the bear case and the bull case. And I think it's more so of a bull case. The bears are saying, basically, anyone who's bearish about this, like this tweet, is saying that, oh, retail's stupid. They're going to get rug pulled. And particularly on Palantir, obviously the Palantir price action has been exceptional. $31 is just like amazing, right? Holding 30 is not easy to do. So a lot of people are saying, well, the only reason it's holding $31 is because retail is aping into Palantir, right? And so that means a rug pull is likely going to happen. They're basically trying to say it's a little bit GME vibe-ish versus like a real sophisticated group of investors buying Palantir. Here's my response to that. I'm not going to argue that Palantir is not expensive right now. I've said that for the past week. Like, obviously it is expensive at 27, 28. You could argue it's expensive. I just believe they will grow into that expensiveness. The difference between them and GameStop is that GameStop's not going to grow into anything. No offense to GameStop, but like, I don't think they're really going to grow into anything meaningful. Neither will AMC, right? So when you compare it to like meme stock rallies, it's not that it's not like acting as if it's a meme stock from the rally perspective. It's just a question of why is it getting that momentum, and that is less about meme stock stuff. That's more so Amazon, Tesla, Nvidia. They were always expensive for years and years and years, and then they have a breakout moment. AWS, GPUs, Tesla with the Model 3. And everything changes. So that's my first response to it. And I think it's just more so the growth. It will grow into the expensiveness. The second argument is retail has always bought the dip on Palantir. Always. Right? Like, so when people are like, oh, retail's buying Palantir, of course they're buying Palantir. It's like, yeah, of course they are, right? You're saying it in a negative way. I'm saying it as when this was $6, retail was buying it as well. So if you're going to normalize it at 6, you're definitely going to normalize it at 30. And yeah, of course retail is buying it, because like retail believes in the company and believes in the vision. Now, that doesn't mean there can't be a rug pull back to 22 or 23. Obviously that could definitely happen, but I don't think retail is buying it just to see it go up. I think we saw those results. We saw the Q2 earnings exposure. We got further clarity on where AI is going. We've seen the demise of Snowflake. After this, we'll talk about Snowflake. Snowflake is going through a lot. I did some deep digging on Snowflake yesterday, and it's not going the best for them. They're down 1%. They got a nasty downgrade by Wells Fargo to 130 from 200. So they expect sales to deaccelerate over the next 2 years. Palantir is accelerating. So I think retail's always been more sophisticated, like objectively more sophisticated than Wall Street on Palantir. So it makes sense that they would be the ones buying it the most at 30. And again, that's only 1.8 billion that JP Morgan's talking about. We don't know how many, Palantir's getting like 15 billion in market cap in the past 2 weeks. So if all 15 billion of that is not retail dollars, if that's institutional dollars as well, then I think the toots are buying along with retail. So overall, I think it's just exciting. And the media exposure, as that compounds with Palantir, yeah, more retail is going to buy because more retail is going to see the name. Nvidia, Microsoft, and Tesla are also, they're not majority retail, but they are retail favorites because people see those names get covered by all the media outlets. I think the exact same thing in the next 5 years is going to happen with Palantir. And because of that, I think there's going to be some momentum as well. So that was the big news that we saw in the context of Palantir. As Jeremy says, we bought that shit up at 6. Correct. Is there some FOMO? Yes. I'm not going to deny that there's not being FOMO. So, and I'm not going to deny that Palantir is expensive. I just think that if people are buying it, they see the growth potential, and they also think that it's a better AI play and at a better valuation comparatively to some of the other AI plays. Like I've always, I said this on Finance Junkies a year ago. I said that I'd rather own Palantir when it was worth, what was the comparison? The comparison was when Palantir was 30 billion. And I think Tesla was at the time 600 billion. And I said, and we were having this debate of which would you rather own for the decade. And I said, obviously Palantir, because to go from 30 billion to 300 billion is a lot easier, in my opinion, than to go from 600 billion to 6 trillion. Now, obviously, I think Tesla can be a multi-trillion-dollar company. We'll talk about some new Tesla data we got this morning as well. But I just think like it's easier to get a 10x if I'm going for like a massive return on Palantir than Tesla. So from a market cap perspective, a lot of people might see $30 and then they're looking at Tesla 200, Nvidia 120, and they don't really think about market cap. They don't care that much about the nuances of it. And they just say, all right, we'll get some exposure to Palantir. That is the process of normalizing it. When you normalize a stock at a new price that's getting price discovery, it's not supposed to be making sense all the time in the context of valuations. And again, it's not like interest rates are zero and NFTs are being sold for 5 million. Because if I was saying this in 2021, it would be stupid because the entire market makes no sense. I think this market makes a lot of sense because Palantir is only growing because they're putting up results, and we have very restrictive monetary policy. So any growth that you're doing is tracked against someone putting their hard-earned $30 a share into getting 5% from a money market fund. So if people are picking your stock over risk-free returns, it's because they have to see something that's relevant to there, or at least they feel there's potential that's relevant, which is better than getting 5% on doing nothing. So I just think there's more legitimacy here, a lot more legitimacy, and that's very important in the context of Palantir and normalizing this process of being at $30. So that's what we have for Palantir. All right, so let's talk about Snowflake from that. So Snowflake, some really interesting stuff has been happening with Snowflake. There is this journalist, I showed you guys her a while ago, Lauren Balkin, who's been covering Snowflake aggressively, and she's felt like it's been a scam for a very, very long time. And yesterday she found out something really interesting that I just want to show you guys. So there's a guy named, and you guys probably know this guy. There's a guy named Todd Combs. Okay, Todd Combs. Does anyone know who Todd Combs is before I get into this? Does anyone know who Todd Combs is? Anyone? Let's see in the chat. I learned about him last night. Todd Combs. See, I didn't know who he was either, so I found about him last night. I'll be surprised if people know, because I legit found out. Okay, no one knows. Okay, so Todd Combs is the CEO of Geico. CEO of Geico. Berkshire guy. There you go. Cause why not cut it. Berkshire guy. Ted and Todd. Todd is one of Warren Buffett's disciples, and he's also the CEO of Geico. So let's read through this. Geico, which is what Berkshire owns Geico completely, the entire company. Geico brought in #1 Snowflake bill runner upper Linda Apsey as CTO, and she bought hundreds of ex-Capital One employees to build Snowflake stuff at Geico after Geico CEO and Berkshire manager Todd Combs. He's been the Geico CEO since 2014, and he's been managing a multi-billion-dollar portfolio at Berkshire for the past 15 years as well. After Geico CEO bought Snowflake stock. So after the Geico CEO and Berkshire manager Todd Combs bought Snowflake, not Buffett, he bought it, but Buffett gets, the blame for it because it's Berkshire. That's when Geico brought in a ton of Snowflake engineers. Geico has a hilarious subreddit of Geico employees spilling all kinds of tea, and it's not just agents like on many insurance subreddits, but many corporate employees. And a lot of them are basically talking about how Snowflake was a mess. Linda had one job to do, and that was install as much Snowflake as possible while going on interviews and talking about how transformative Snowflake is for Geico. So the CEO the CTO that they brought in to Geico had a #1 responsibility, and that responsibility was to make sure that Geico implemented as much Snowflake as possible, because her boss, the CEO of Geico, Ted Combs, that Berkshire owns, bought a crap ton of Snowflake stock. And so this is the kind of, this is not like literally true. This is the logical deduction of like how this stuff plays out. And it becomes very obvious when you see, what happens. But the argument here is very fishy, because it's like, all right, so the Snowflake CTO, or the Geico CTO, is implementing a ton of Snowflake. She's talking about how Snowflake's helping Geico, but her boss is the one that's buying a ton of Snowflake stock, obviously trying to get Snowflake to have more pull in the enterprise. If you look at the LinkedIn job turnover data, so this is what really kind of solidifies it, you'll see that many of the Capital One people brought over to Geico under Linda to make lots of Snowflake were let go in the past 3 to 4 months. As Martin said, that's called a conflict, correct? Now, what also happened in the past 3 to 4 months after the 13F filing we saw yesterday? It shouldn't be a surprise that Berkshire dumped their Snowflake position when Geico CEO Todd Combs, also the Berkshire manager, is laying off the Snowflake people at Geico, and he's quite literally the guy making investment decisions for Berkshire. So to break this down, Geico CEO is the same guy that manages a ton of money at Berkshire. He buys Snowflake stock, then he gets a Geico CTO to come in to hire a bunch of engineers to implement a ton of Snowflake. It doesn't work. They have to fire all the people, and then he sells off his Snowflake stock. It is all this random stuff happening. Tom Lee's on CNBC. All right, let me pull him up right now. It's all this sort of random conflictual stuff that's happening in order to ultimately make the argument for why Snowflake should be implemented into the enterprise. And if it's not providing transformational value like Palantir, which is expensive, but that's actually providing value, then that gives you your argument for why Berkshire is dumped. Funny stuff to read that last night, but that stuff is not happening with Palantir. And I think that's important to remember when we think about companies that actually provide value. Okay, let's get into Tom Lee. He is on CNBC. Let's see what he has to say. And let's pull him up now. How is that allowed? Well, your guess is as good as mine.
He joins us here at Post 9 on a summer Friday. Tom, thanks for coming in.
Great to see you.
Was it last week? Was it difficult to keep your bearings in the midst of that crazy price action?
Without question, because the market had been whipsawed by data point to data point, as you guys were recapping. You know, the jobs report raised recession fears, big risk off. Then we got inflation this week, which was pretty tame. And I think markets suddenly went back to thinking about liquidity coming into markets. I think that the data dependence of the markets and the Fed is very tough for investors. And I think if you look ahead, I'd say we always know the summer is tough. Summer probably runs through October, but I don't think that anything's changed into year end, which should look pretty good.
But are you lower conviction now than you were 2 weeks ago?
No change in our conviction, but it is just recognizing August historically is a tough month for markets. I mean, one thing that maybe investors can be encouraged by is since 1928, the most common month for the summer low is August, and the most common week is the first week of August. So I think maybe the worst is behind us, but it doesn't mean we're straight up from here.
Right. And I guess the question is, I keep going back to, that moment in mid-July when we were at the highs. You were just shy of 5,700 on the S&P 500, and everything was a go. It was, the AI earnings path was kind of unquestioned. In addition to, general soft landing expectations, you kind of didn't have a lot of painful trade-offs to worry about in terms of policy or growth. Can we get back to something like that? I guess the idea, as you say, maybe summer lasts through October. Do you expect that we're going to have to continue to reset around these levels?
Yeah, I think if my best guess would be, it's still going to be a struggle, but we're climbing the escalator again. I think Jackson Hole is going to set a positive tone on balance just because the evidence is growing. FOMC members want to be forward-looking, as you guys are pointing out. Data dependence is dangerous at turning points. And then we get the jobs report for August, which I think should reverse some of things that could be temporary. I mean, that's a guess. And if it is, then recession risk is sort of reduced. But now we have real rates are too high. And that means investors will be comfortable with cutting.
I'm thinking back to some of the notes you wrote after the last jobs number. And you looked at Hurricane Beryl and the number of companies in Texas that had no power for 2 weeks. And you do think August will be reassuring on the NFP print?
Yes. I mean, in some ways, the weekly claims is telling the story. We had a surge in claims, multi-month high that have come down since then. And so even if someone says there was no effect from the hurricane, how do you explain claims really improving so much, especially in places like Texas? And, a million homes without power for 2 weeks, how could that not affect the local economy and the jobs market?
this rebound that we've gotten from the lows of early last week, initially, certainly until yesterday, it was back to the first half winners. It was a lot of the mega cap growth stocks, and the equal weight S&P really didn't have that much of a pullback, and it's closer to its highs. But small caps definitely got a flush, and yesterday they rallied big on that retail sales number. But it seems like that's still been a complicated attempt at a rotation.
That's right. They always say bottoms are tough and bottoms are a process, and small caps are really in the process of what we think is a multi-year bottom. And so conviction is not going to be as strong as things that have been working. I think most people's toolkit is to buy the triple Q, the NASDAQ or the AI names when they want to get back in the markets. But cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
And then, we had a miss on housing starts this morning. So it's funny, is like the parts of the economy you thought you could rely on for a while, maybe are giving way as other ones maybe start to bottom. But what's your thought there in terms of the flow through to the rest of the economy?
I think housing, auto sales, and durable goods are essentially in recession.
Mm-hmm.
It makes sense because cost of money is so high. I mean, it's super expensive and hard to afford a home or to buy a car with these rates. These are also directly benefiting from Fed cuts because adjustable rate mortgages adjust, business loans adjust, auto loans, credit card, they're sensitive to short-term
builders
rates.
loans too. I mean,
yeah,
if you're building
that's
a house.
right. Cost of money for builders, yeah. And so I think these really benefit from an easing cycle, but a market that believes there's an easing cycle underway.
How many cuts you think we get this year?
I'm looking at consensus, which is somewhere between 4 and 5.
Before the end of the year?
Yes.
So about 100 basis points?
Yes, I think that's right, but it depends on where inflation prints the next couple of months. But our base case is that we're on a glide path towards 2%. That's better than consensus. So I think 4 to 5 still makes sense.
And you've been part of your thesis has been that elements of CPI have been falling, in your words, like a rock.
Yeah.
I actually saw that phrase repeated in another desk note yesterday. So that's spreading. But are you as assured of that? And when you look at things like car insurance or some of the coincident costs of owning a vehicle, as you point out?
Yeah, I think one of the things that surprises us still is that two things are keeping inflation high on a weighted basis: shelter and auto insurance. Auto insurance adequacy is there now. If you look at the results from these auto insurers, they don't need to raise rates. So I think that's cooling, and that'll come in the second half. And for housing, rent is stabilizing, and I think housing is going to cool. It just needs to get to 3 to 4%, and then markets will be comfortable that we're back at 2. But median inflation rate is still 1%. That's below Fed's.
Yes. Well, I think as Greg Ipps said this week, rents are inertial. It takes time for those new rents to cycle in.
Yeah, that's right.
Tom, good weekend. Thanks
you
for coming
guys.
in. Great seeing you as always.
Great seeing you.
Tom Lee. When we come.
All right, that's Tom Lee's take. He did say some interesting stuff about bottoms. Bottoms are tough. Look, I agree with him. Housing starts this morning came in lower than expected, and that makes sense because we're not starting to create as many homes. Bitcoin is moving nice right now, up 1.5%. We're not making as many homes because rates are high. So, look, at the end of the day, if you take out shelter, inflation's below 2%. It doesn't look like it's dramatically increasing. It looks like we're either going to stay at 2.9 or get to 2.8 for the next CPI report. And the Fed's going to cut. Like at this point, I think Jay Powell will realize it is political suicide, basically, for him to not cut, because there's no way that he'll be able to manage Congress. I mean, already he's done a good job managing Congress, raising rates to 5.5% and keeping it there for a year, dude. For a year, we've kept rates this high, and he's done a good job because inflation's technically come down. So I think at this point he realizes it's time to cut. We'll get the cut, and then the question is going to be how much is it baked into the market and how much new capital frees up. I mean, 25 basis points is not going to be enough to free up a ton of liquidity. It will free up a decent amount, but I think the 75 basis points, hopefully by the end of December, is what, and the pricing in of that is what causes a more larger melt up by the end of the year. But that first cut is going to be important to see how it plays out. So one final quick thing on a Snowflake. So again, the Snowflake downgrade is brutal by Wells Fargo. They said from our quarterly survey of customers paying $1 million or more. We unexpectedly came across multiple breach impact customers from the data breach stuff Snowflake had a month ago, stating plans to move off of Snowflake, including 2 customers doing $25 million in ARR and another one doing $5 million. Now, this could be a CrowdStrike thing where the customers say they're going to move away and they end up not not leaving. So that might not actually affect their numbers. But the point is, when you look at what happened with Geico, and it's not really illegal what Todd Combs did, it's just kind of fishy, right? That you buy Snowflake stock, then you implement these Snowflake engineers, and then as soon as it's not working, you sell all the Snowflake stock. And it goes to show it's another conventional embodiment of this idea that Karp talks about, which is that enterprises want value and they get, again, steak dinners. They get nothing that's real. And then they have to realize that if they don't get value, they're going to die. Like Geico's not going to be competitive unless it has a data analytics platform that actually derives insights. And every business knows this because they have all this unlocked data that they need to unlock potential from as well. So I think that's an example of why Snowflake is down 30% of the year and Palantir is up 80%. And now on their earnings, I am very interested, dude, very interested to see if they can reaccelerate growth because Snowflake is declining in growth. Palantir is accelerating. Now, to be fair here, Palantir had horrible growth in 2023. So when Palantir is comping against the numbers from 2023, it's really easy to have better growth. Next year is going to be the real test if we can keep going to 30%, where I think Palantir could go to the moon next year. If they keep showing this type of growth, because you're going to have to be building. I mean, Palantir is going to Palantir by Q3 2024 will have to be doing $900 million quarters in revenue just to be able to keep like a 25 to 30% growth rate. So it's going to get harder next year. It's easier this year. But Snowflake, they've been declining from 70% year-over-year growth now to 24%. So unless they re-accelerate that, the narrative on the market is like, oh, this company's not growing as much anymore, even if they're putting up more revenue than Palantir, and Snowflake's still not GAAP profitable, and 40% of their revenue is stock-based compensation, and they have 7,000 employees, whereas Palantir is less than 4,000. It just gets to the point where, and there's not really any transformational value as per, how these enterprises are describing it. It gets to the point where maybe a lot of that money leaves and goes to something like Palantir, which then leads to Palantir's overvaluation because you've got all this demand for shares that really haven't put up the growth to justify that much demand, but that money doesn't want to be anywhere else. It wants to be in Palantir, and so Palantir ends up getting the momentum. This is a chart by Arnie this morning showing the difference in stock-based comp as a percentage of revenue. Palantir's used to be 70% back in 2020. It was insane. Now it's 21, Datadog 21, ServiceNow 17, Snowflake still at 40%. So that's what we have right now. Okay, you guys are saying do a poll on cash liquidity. All right, so let me do that poll in the chat. You can put in the number as well. I am like maybe 1 or 2% cash, dude. I don't have a lot of cash. I am in, dude. I mean, most of the cash is gone from August 5th. Like whatever remaining pennies I had left, I was finding a way to pummel it into the market. Okay, so what is your cash position? I'm going to put 4 options. I'm going to put less than 5%. Then we're going to do 10%. Then we're going to do 25%. And then we'll do 50% or more. I think those are 4 fair options. So let's see. Let's see what you guys say. Palantir is also diluting a lot with this stock compensation. Yes, I agree. Palantir is definitely diluting a lot. We're factoring in 2 to 3% dilution per year. That is correct. It's just gonna so that's another reason why growth really has to be good, because if they're diluting that much, you own less of the company every time they dilute you. So the growth has to justify you continue to own it. So I agree. It's just they've got their SBC under control, right? At 20% of revenues, that's high, but that's not almost 50%. And again, who are you paying the SBC to? Really smart people. I think Snowflake's giving it to a lot of salespeople who are closing deals. Palantir is giving it to the smartest engineers on the planet. I don't know if you guys saw Ted Mabry's post on LinkedIn. They had just hired a new employee at Palantir, and the dude hacked his way into the company after. Let me show you this post. This is really cool. So this is the type of culture at Palantir that's getting the stock-based comp, right? So this guy named Joshua Wiener. Recently, we had a candidate pull an all-nighter following a recruiting event to build an ML project in AIP, demoing it instead of interviewing the next day. It was awesome. He now works at Palantir. So the way this guy got his job is by literally building a project in 2 days, demoing it to the people at Palantir, not going through an interview process. And that's how they decided to hire him. It's that type of culture, right? That type of you just go out and get it and you don't care. That gets you at Palantir, because again, it's a very competitive place to get a job at. And because I talked to a lot of employees, dude. One of my boys from Italy who has a job there, he went through 8 rounds of interviews. and he was like a top CS guy at Brown in Rhode Island, the Ivy League school. So he's one of the smartest guys I know, and like it's tough. But that's the culture you want, and that's where the stock-based comp should be going, not just to salespeople. Okay, quickly on the Tesla news. Let's look at that because I said we did have some Tesla news. So this is the Tesla news that came out from Bernstein. So Bernstein again reaffirmed their underperform target at $120, and this is why they said so. Poll results real quick. 49% of you have less than 5% of cash. 10% of you have 50% or more. So the broader majority of you are more into the markets than not. Okay, so here's the Tesla thing. So Bernstein says Tesla has lost share in old geographies in both EVs and hybrids, or sorry, in both XEVs and EVs. Share loss has been the most acute in North America. So this is not new news. I mean, Elon has told us this as well in their Q2 report. But the question is, what does Bernstein think Tesla's going to be able to do about it? And here's why, and this is, kind of sums up the bear case on a lot of Wall Street firms on Tesla. We don't believe that Tesla will be able to regain share or grow materially until it launches all new lower priced offerings, likely only in 2026 and 2027, and believe the company's valuation is increasingly disconnected from prevailing fundamentals. Now, this is interesting to me because basically they're admitting, hey, we don't think this FSD thing is real. We don't think anything's going to happen with it. We don't think Elon and this 10/10 event is going to, showcase that the momentum in FSD is so strong that everyone needs to buy up the stock. We definitely don't think it's going to start having ride hailing within the next 2 years. The only way, here's the chart right here, that Bernstein and a lot of these other bearish analysts think that Tesla's going to gain any momentum is by launching new models. And Tesla and Elon basically said, we're not doing that, right? I mean, they're going to be launching models, but it's not to the extent that the street cares about, because Elon says, hey, we're betting the farm on autonomy. So as you can see right there, Tesla's overall market share is now 12% in the first half of 2021. BYD actually is 21%. And then you've got everyone else fighting for the scraps. Toyota is at the bottom at 1.7%. So the interesting thing here is, if you are bearish Tesla, you have to essentially be bearish that in the next 2 years, there is no way that FSD begins to scale in a meaningful way. And if you're bullish, you have to believe that they sacrifice releasing new models at a rampant pace, primarily to focus on getting FSD to work. And you either believe that on the bear side or you disagree with that on the bull side. How is Toyota at the bottom? Well, Toyota is not necessarily the best in the context of EVs. But in from my perspective, I think that obviously FSD is going to work. I think it's going to scale. I do think there is a legit argument that we don't know the timeline on it. And this all comes down to, objectively speaking, what is the timeline? If by 2025, we do not have FSD robo-taxis running around picking people up, even if it's just in 1 or 2 cities, even if it's just in, even if it's just in Miami or Austin, if there's not a real app ready on people's app that starts to go, then I think the street's going to punish Tesla, because they're just going to see no reason, because obviously the earnings are not good. And we all know the earnings are not good, but the stock is still up from 130 because of the potential and of the story. So I think if we don't see any momentum now on that's going to be tough. Now, I think we'll get momentum by June of 2025. And I also think we're going to get Optimus momentum by June of 2025 as well, because I think the humanoid robotic space is moving pretty aggressively. So if those two things are true, then I think Bernstein is wrong. If they're not, then, the bears are definitely going to have some arguments to say about Tesla going into 2025. Retail sales data was good. Yes. So retail sales data yesterday was up 1%. $800 billion were spent in the month of July. The other thing I want to say about retail sales data is that the United Kingdom had good retail sales data as well. So not only did the United States have good retail sales data, but retail sales in the UK rose 0.5% month over month, following a downwardly revised 0.9% decline in July. So you're seeing across the world, we're starting to get more retail sales data increase in the United States and in the UK, and that's overall good for the broader economy. And then, yes, as you guys are saying in the chat, the dark horse is energy. Energy is growing at 100% year over year, $4 billion last quarter. We had Trump and Elon on Spaces. I forgot that even happened this week, but that happened earlier in the week. And, the one thing they both agreed on vehemently was that energy demand is going to be massive. And there's a lot of ways to play energy. Steve will be on the market close today. We have a lot of stuff to talk about. He has some new energy stocks he's looking at, so he'll join me. But one of the reasons he's excited about Tesla is he thinks that if we need massive energy demand, then Tesla's going to be one of the best vertically integrated players to give energy. And interestingly enough, Bernstein doesn't talk about that. They only talk about the car business, which I think is a little short-sighted when it comes to understanding Tesla. All right, here we go. It is Friday, August 16th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Palantir 31.18. Nice green candle on Palantir. It was at 30.70 in the pre-markets. 31.15. So still down on the day, but very slightly. Got a good green candle from the pre-markets here on Palantir. Nvidia at 121, down about 1.2%. Nvidia is up almost 30% in the past 9 trading sessions. So seeing it stabilize here at 120 would make sense, but it is down 1% of the day. Robinhood 1945, down about 0.5% on the day. Tesla 212, they opened green as well from the pre-market, 212.62. So Tesla is green as well. It's red on the day, but green from the pre-market, which is not too bad. Bitcoin is up, which is nice. SoFi 692. SoFi was up 5% yesterday. So SoFi is indeed green. GameStop is down. Chewy is down. Elf Beauty again. Ulta. We saw the stake that Buffett took in Ulta. $250 million. Ulta 368. It was at 325 to start the week. So Ulta already doing not too bad. Google at 163, getting rid of all the losses. Google was at 158 at one point based on those DOJ lawsuits. Now it's at 163. It's not like the DOJ lawsuits are bullish. They're definitely like bearish. It's just that the probability of them becoming real, I feel like, is like insignificant, right? It's likely not going to happen. So I think people are buying the dip on Google, assuming that they're not going to get broken up that dramatically. And if they do get broken up, you would have to go after Amazon and Meta, and I don't know if the DOJ is going to really try to do that. Meta at 532. Meta again, basically flat on the day, but almost approaching all-time highs. Amazon's been fun to see go from 200 to 150, now to 176. They had an incredible quarter in Q2. Slightly missed on advertising and operating margins, but outside of that, Amazon seems fine. Also, I saw this post on Twitter. I'm going to ask you guys a question, but it was 4 stocks, and which one would you go long for the next decade? Amazon was one of them, so I'll share that in a second and see what you guys think out of those 4 stocks. Google was 162, Netflix 669. Netflix again fell almost below 500 at one point, now at 670. Apple at 224, Lyft at 1082, TSM at 172. Let's look at the semiconductor names real quick. Semis are down on the day besides ARM and SMCI. SMCI 485 to 625. Hell of a swing if you got in on that, but it took some balls to buy it at 485 because kind of felt like SMCI was going to be collapsing. AMD at 146, NVIDIA at 125. AMAT had earnings yesterday. They had a pretty good earnings, even though they're down. They were up 5% yesterday, down 3% on the day, but still overall not a bad day for them. Robinhood goes green, 1965 on Robinhood, up 0.56% on the day. So Robinhood is green. Palantir basically green. It's like 2 cents away from going green on the day, 31.17. Tesla as well, 212, down about 0.5% on the day as well. Let's see if we go green on a Friday, man. Let's see if we go green. We had a green Thursday. It was an awesome Thursday. Palantir, there you go. Just got green on Palantir. Let's see if we can actually get green on a Friday and we can keep the momentum continuing to go. S&P at 551. So S&P's red. NVIDIA now recovering. Look at that. We got a green candle on NVIDIA. It was at 121, now 122.14. Robinhood 1959. Again, Robinhood got the Deutsche Bank upgrade yesterday to $24. Piper Sandler to 23, Wolf Research to 29, and then Bank of America to 32. So they've been getting a decent amount of momentum. Celsius is flat on the day. Nike still maintaining its gains. Where's Starbucks? Again, Bill Ackman bought 3 million shares of Nike. Starbucks is at 94.16. So Starbucks, if you bought puts on Starbucks, they haven't printed yet because it has maintained a $20 billion market cap increase. Now, the Starbucks CEO, the new guy, they paid him $115 million in stock and options and cash to join Starbucks. So they gave him a hell of a reason to leave. And that's why I think he ended up leaving. Rocket Lab, wow, up 4%. There you go. Rocket Lab, it's up almost, almost 15% for the week. Rocket Lab is up for the past 5 days, 12%, past 6 months, 30%, past month, 9%, year to date, up 15%. Getting some momentum, man, and it makes sense. It makes sense. ASTS as well, probably the catalyst for some of that momentum. ASTS, wow, that went green. You would think after it goes up 50% yesterday. Nope, still plenty of buyers. ASTS up 1.18%. This thing is up almost 2,000% past 2 months. So this one has been an amazing story. McDonald's is up a little bit. SoFi is now slightly red. Cruise lines are a little bit red today. NASDAQ is down about 0.39%. Rivian down about 0.58%. Alibaba up 4%. So they're getting a little bit of an earnings jump now. They had a good earnings. It's just the same China risk continues to scare investors. Adobe's up a little bit, and then Mercado Libre at 1980. Mercado Libre, I think, was at like 1600 in February. So this one's done very well over the past couple months as well. Snowflake down about 1% on the day. Where's Palantir? Palantir. Oh, there you go. Palantir 3150. There you go. Look at that. Look at that. Little bit of a breakout. Let's see where the resistance is on this bad boy. Let's see. Dude, if we break 32 today, that'd be fun. There's not that much. Well, no, the volume's good. Volume's good. 4 million. Volume's great. At 32, there are 27,000 shares. And before that, there's really nothing, dude. There's like 1,000 shares at 3150, which we were just at. Yeah, I mean, look, if the momentum comes in, there's 4,000 shares at 31.95 and 28,000 shares at 32 is not a lot. Let's see. Maybe. There's not some aggressive wall that's super hard to get over if it works. Wasn't August supposed to be slow? Yeah, I mean, we talked about this. August in an election year is actually not that slow, but technically, yes, it was supposed to be slow. And for the first month, or the first week, it was not even slow. It was scary, right? Japan, all that stuff happening. Palantir right here, 3160. So we got through 3150. But with the VIX spiking at that high of a level, it made it likely that we weren't going to get that dramatic of a volatility spike again, which meant you buy the dip. And if you bought the dip, you have done relatively well over the past week. Let's see. Palantir 3169 right now. It's getting some momentum. Getting some momentum. Tesla, where's Tesla as well? Where's Tesla? Tesla went green. Yeah, there you go. Slightly green, but Tesla went green. What did you guys say on the poll? What's the final results? I'll close the poll right now. Yeah, so 51% of you out of 811 votes say less than 5% is cash. 11% say 50%, 16% say 25%, 23% say 10%. Yeah, I'm in, dude. I'm in. And it feels good to be in the market, 3170 on Palantir, but also when Japan and August 5th happened, it kind of sucked because there was like no cash, you know? There was like nothing. So I mean, I had some cash, right, but not enough where I could like aggressively buy the dip. I aggressively bought the dip with the cash that I had. So if you were sitting on cash, if you timed the July 16th top and then got the August 5th bottom, dude, you should be having a hell of a year. You should have basically outperformed everyone if you were able to do that effectively. Like if you were up 40, 50% year to date, you should have a chance to be up like 60, 80% now because you got to double dip and you got to double dip on generational prices, technically. I mean, I don't know if we see Palantir at $20 again, maybe we could. Palantir 3180. I'm not saying it's not possible. I'm just saying we have to get a little bit harder of a pullback across the entire market to see $20 again. It's not going to be easy to see. And it was there on August 5th. It was just sitting there. And if you had a couple $100,000 in cash, boom, you might be set for a while. So it's just so crazy how the past couple weeks played out. I think Arnie double dipped to an extent. Arnie was able to get some momentum. And Arnie's like majority Palantir, so he's massively outperforming the S&P. 3173, we hit 3183 on Palantir. Duluth says they're up 100% year to date. That's incredible. I think 2024, if we end the right way, is going to end with people being up like multi-baggers this year on their year to date charts. Now, we got to see how the year plays out and ends, but I think people are going to have really good years. We just got to get to the end of the year without too much turmoil. Sold $35 Palantir call options for 27th September. Did I mess up? Let's see how much premium you got paid. So you're saying September 27th, 35. I don't hate that because I think September is going to be volatile, so I don't hate that. You got paid 74 cents. I don't hate that, dude. I don't hate that. I mean, it's not bad. It's not bad. It's just, dude, here's the thing. When things get crazy, when things get into a bull market, things get crazy, dude. You know what? You know why things get crazy? I was looking at Robinhood's revenues from 2020 because they have to disclose that when they IPO'd. Dude, the trading volumes and the revenues were like $200 million of revenue just on like equities. They did 40 million last quarter. So they did 5x that amount in 2020. We haven't really seen crazy like it's been a bull market, but it's literally nothing compared to 2020. Like 2020 was a different time, you know? So if we get into that type of market, which I think with rates this restrictive, it's hard. Now, if rates come down expeditiously, maybe that could happen, but things can get wild, bro. And any price target you have can go out the window when things get wild. Now, the crash down after that can also be tough, but in that moment, it can get crazy. Now, do I think that's going to happen by September 27th? No. So I think your covered call will be fine. But just to think about that, things can get pretty crazy when retail gets involved. And really, retail's not back, dude. If you look at the Bitcoin crypto is a good proxy for retail. Retail is not really back, dude. Like they're back in stocks to an extent. They're definitely not back in crypto. And when they get back in crypto, they really start speculating, and they haven't really gotten back in crypto. So I think if we see a crypto bull market at the end of the year, Palantir 3188, then equities in general could just have more liquidity to do better. All right, so I think we're making a run for 32, guys. We are actually trying. And again, from my resistance, let me show you guys this. There is nothing. So there's the red side, there's the green side, right? You see as I scroll down, see the ask? Look at that. 100 shares, 2,000 shares, 1,000 shares. Like there's nothing. The only one that's intense is that 27,000 shares at 32. The focus is a little bad, but right there's like 22,000 shares at 32. So really there's not, let's see if you can see that right now. Right there. 22,000 shares at 32. There it is. So I mean, if it wants to run 3190, if it wants to run, bro, it's there's not like 100,000 shares waiting to be sold off. So, dude, we are so greedy as Palantir shareholders, dude. We're so fucking greedy. We've had such a good year, and we're like, hey, why not 32? Why not? You know, dude, 32 would be a legit double this year because we were at 16 year to date. We were up 87%. Okay, it won't be a double. It'll be like 93% or whatever, or 90% year to date. But holy crap, dude. This is awesome. This is fucking crazy. I'm scared to sell Palantir cover calls. I agree. I would be scared too, bro. I would be scared. I mean, it's just one of those names that's hard. This is called Weeble. The app name is Weeble. From trauma to greed, dude. This is so dope. This is like, it's I think it wants to hit 32, bro. Like the price action and momentum just screams that it wants to go higher. I don't know. And do I think this is retail or do I think institutions? Honestly, I think it's a little bit of both. There's definitely retail getting involved here, but I think if you're a fund manager, I told you guys the story, right? I've told there's new people to this channel, so I'll tell the story again real quickly. But I got invited by a fund that manages $100 million in New Jersey, where I live, in 2023. They invited me, they got me lunch, they they wined and dined me, all this stuff. And they wanted to ask my thoughts on Palantir because they had a big position in Palantir, 31.95, and the stock was dead, like it was at $7, right? This was after I think Q4 2022 or something. And so the CEO of the fund, when I'm sitting with him, he's like, dude, I really believe in Palantir, but like, I hate the SPACs. I hate this. I hate that. Their sales, blah, 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 blah. He just gives me every bear case he could possibly give about Palantir. Every single bear case. Like, he's visibly upset because his clients are pissed off. And then at the end of it, I'm like, so why don't you just sell it if you're like so bearish? And he looks me in the face. He's like, because I fucking believe in Alex Karp. And then I was like, all right, so there you go. Just buy some more, dude. Like, why are you stressed out, dude? Like, you're good to go. And so then, the stock starts running. And then when I called them up after, they're like, dude, the hardest problem we're going to have now that the stock's like starting to gain momentum is to convince our clients to not sell at 20. I think the stock was 7 at the time. And so they were like, hey, our clients, when it goes to 20, they got into Palantir in the private markets in 2018. So they've been investors for a while. I think their average was like $5. So like, if we get to $20, our clients are going to be sitting on a 400% return. They're going to want to sell. And because we believe in Palantir, our hardest problem is going to be trying to convince these guys, Palantir getting rejected at 31.96 right here, to not fucking sell. I haven't followed up with them in like a year, but I should hit them up and be like, so did you end up like having to trim, or did you convince your clients to keep it? Because if they sold at 20, I feel like their clients would be even more pissed off now, because we're about to hit 32. So it is pretty cool to see how that has played out over the past year. Rocket Lab is also up 12% on the day. There you go. 13 percentage points on Rocket Lab. Shout out to Mr. Matt Money, who has been the guy getting everyone excited about this name. Rocket Lab at 13%. Matt, can you tell us in the chat why it's up? Because is it just momentum, or do they have a launch coming out, or kind of what do you think is the reason for why it's up right now? Palantir 31.79. I still think we could break 32, dude. There's definitely going to be sellers here, but there is no massive wall that is restricting Palantir to get back to 32. So I think if we get the volume, we should be able to break through. ASTS up about another 10%. Maybe that's also why Rocket Lab is up again. If ASTS is going to keep pumping, Rocket Lab probably gets it there. What about December $40 Palantir calls? You mean as a selling the covered call? I think those could be safe. I don't think it's 40 by December. My price target is 35, but could it get to 40? Yeah, it absolutely could get to 40, dude. 100% it could get to 40. So it's just a question of how wild the rate cuts, election cycle, and Q3 earnings goes. And if it gets pretty wild, again, in a bull market, things go up. And when things go up, they discover new prices. You get more FOMO. It could definitely hit $40. But I don't think that's a horrible strike on your covered call. To be a little safer, dude, I would do 42, 43 though. TJ, I see you in the chat. We'll get you on in about 10 minutes. So in 10 minutes, guys, TJ will be joining, and we're going to get through all the options that we've been looking at for the past for the past 6 months we've been having this challenge. So I'll get you on TJ in a bit. Palantir 31.81, Robinhood at 1968, a 0.65%. So Robinhood getting some momentum here. Bitcoin at 58,000. And you got Tesla here at 215. Rocket Lab, wow, up 16%. Rocket Lab up 16%, bro. Holy crap. That is up. That is up. Thoughts on Beto and their monthly dividends? Have 160 shares. I like BitX more than Beto. I don't love Beto. Beto's one of... I don't love it. BitX has a better dividend too. I would look into BitX's dividend. If you're going to go leverage on Bitcoin, I think BitX is a much better one than Beto. I think it has more liquidity as well, more AUM. I think their fees are a little bit lower too. So I don't hate Beto, but BitX has a good dividend, and it's. I don't know if Beto's 2x leverage though. BitX is 2x leverage, so that might be the difference for you. But that's the one that I like a little bit more than Beto. 31.90 on Palantir. All right, it looks like maybe we set ourselves up into the run here. 432. Let's see. Let's see. 31.81 right here. Robin at 1970 as well, getting some momentum. My boss on Monday. You're late. Me. Watch your mouth. Yeah, that's exactly with Matt Money. Myers says, "Admit, are you still buying Robinhood?" I would. Again, I think it's undervalued at 19. If you just look, and don't believe me, dude, read the research reports. They're all on my Twitter. Read how the analysts are thinking about this company. It's pretty obvious how they're thinking about it. There's not that many diverse opinions on Robinhood. There's bullish and bearish. The bears are 10% of the analysts, 90% of the analysts are vehemently bullish after those earnings. They saw the growth that they're seeing. So yeah, now I bought a lot at 16, 17. So I just really don't have any more cash to buy. But if 25 is my target, then I think 1960 is not horrible. Could we get some more volatility to the downside? If August is choppy, September is choppy, yes. So selling puts on it probably is the better strategy. And that's what TJ and I will talk about today, because we have puts on it, but I like it under 25. SoFi at 696. SoFi trying to get to $7, up 0.7% on the day. AMD at 147. AMD is running. Where's NVIDIA? Is NVIDIA running too? Yeah, NVIDIA 123. It's green. I think we might have a green Friday, folks. Maybe we have a green Friday. Palantir 31.82. Tesla 217. Tesla trying to make its way back to 220. And then Rocket Lab, that's the story of the day, up 19%. Congrats to Rocket Lab shareholders, man. This thing might break. Oh, it broke 7 at one point. Now it's at 692. If you're in Rocket Lab, congrats. Let me see the Rocket Lab resistance as well. Let's see what's holding back at 7. So Rocket Lab has at $7, 13,000 shares. I mean, that's not a lot either, bro. If the volume's there, that's not a massive wall to break through. Rocket Lab volume today is already 15 million right now. I mean, it's not bad. Not bad. Yeah, if you had $7 January 2025 calls, that's also, those should be doing decently well. Where's Palantir? Palantir 30. Okay, here we go. Come on, man. This is our 5th time trying to get to 32. We got rejected at 31.94 5 times today. We're at 31.96. At 32, there's really not. Okay, there's 33,000 shares. So it went up a little bit. That's about what, 900 grand? No, a little bit more than a million. But oh, there it is, 31.96. 31.96. We got to see. Let's see. Those few cents away. Let's see. Is 32 cowbell worthy? I think we're going to have to win the cowbell for 32, man. If we get to 32, we're going to have to. We see $32, dude. We were just at 20, then got to 24 before earnings, then got to 28 after earnings, then got to 30, which was a big deal, then got to 31. We're like, all right, that's awesome. Now the street's like, hey, we're not done yet. We're going to get you to 32. I think we got to ring the cowbell for that. I think we do. There's still 34,000 shares, though. Those 34,000 shares are going to be the hard part to break. It hasn't broke because you haven't bought your share. Let's see. Let's get closer to 31.98-ish, and then we'll buy the share and see if it gets there. I always average up when I buy the share. Always. BitX pays a dividend. I didn't see it in Robinhood. It doesn't say it in Robinhood, but it does. Look it up a little bit more on some other websites. But Adam Bergman has a ton of BitX, and he gets paid a dividend every month. So he texted me when he's like, "Dude, why am I getting paid a dividend?" I'm like, I guess BitX pays the dividend. It's a good dividend too. But again, there's a lot more leverage on that one because it's 2x to Bitcoin. SoFi here at there you go. SoFi 7 $7 on SoFi. Robinhood 1972, Bitcoin 58,000, SoFi $7, and Palantir 31.91. All right, Palantir needs to hit 32 so I can bring on TJ and so we can do our segment. So TJ, you're gonna have to stay backstage until because no one's gonna even listen to us if Palantir hits 32. They're gonna be like, we don't care about wheeling options. We want to see Palantir. We don't see the bell ring on 32 for Palantir. So let's see. Let's see if in 10 minutes we'll get TJ on at 10 a.m. and let's see if we can get this 32. What's the sell pressure for SoFi at 7? Okay, so this is a good question. Before I answer that, let's see if we can hit 32 right here. Come on, bro. Come on. All right, I'm buying my share. I'm doing it. I'm buying the share. All right, share's done. I bought it. 31.96, I bought it. Let's see. 31.96 complete. Let's see now. Let's see. So on SoFi, the SoFi one is very interesting, dude. I was looking at SoFi's order flow yesterday. It is one of the most insane order flows I've seen in my life. Like, there will be 50,000 shares at $6.82, and then 50,000 shares being ready to be sold at $6.83. Like, it is so tight. The bid-ask spread is so tight, which is why you can always get filled on SoFi because there's so much liquidity that it's just incredible. So there's no wall on SoFi. There's no $7 resistance. It's just a ton of shares going back and forth. 702 right now on SoFi. All right, Palantir, are we there? We're 1 cent away. 1 cent away. I didn't see 32. I think it's here. 34,000 shares away at 32. I didn't see. You saw 30. Someone saw 32 for a second. I didn't even see it for a second. I imagine we break through it though, dude. We're right there. I think we break through. Come on, man. I think we break through. Some of you guys saw it. I didn't see. I bought the share already, so we bought the share. I'm not seeing it on Robinhood, not seeing it on Webull. Yeah, some brokerages are definitely showed a little different prices, but we got to see it universally to see this play out. Yeah, some of you guys are seeing in different levels. Yeah, I'm not seeing it yet, dude. I can't get excited if I don't see it. I didn't see it. Just didn't see it. And we've got to see 3201, 3202 to really see that every brokerage, universally got 32. Because if Yahoo Finance got it for a millisecond, that doesn't count. 32 is hitting 30 right now. Yeah, exactly, dude. 30 took a minute to get through. 30 took a minute. Let's see. It was 31.99 in TradingView. Yeah, same thing on Robinhood. So it's getting rejected. And again, it makes sense. There's 32,000 shares at 32, so someone needs to buy those to get us there. Ulta's at 373. Rocket Lab up 17.5%. Having a good day. Clean Sparks up 4%. AMD's at 147. SoFi 701. Yeah, so again, SoFi, there's no walls on SoFi. There's just a very tight bid-ask spread. and a lot of shares going back and forth on SoFi. Palantir, all right, $31.99 again. We just need one big push. One big push. One big push, and we see 32. Nope, and there you get the sell. Someone's selling right there. Boom. And now we're back at $31.99. I think we get the push. We have the momentum's there. We just need one buyer to step in. I would be surprised if it like really goes back to $31 without hitting 32. Because now the momentum's there. Now, especially the market's green today. So we're also seeing elevated greenness. Rocket Lab's up 20%. Incredible. Guys, I did not see 32. I know some of you guys are seeing it. I really didn't see it. I know a few of you, so I'm not seeing it at all. Even on Robinhood, it's not there at all. Neither on Webull. Either we go back down to like 31.50 and we're not seeing it today, or we actually crack through it and we see it. Let's see. Let's see. It's like a mid's delivering a baby. Oh my God. That's literally what it is. Is FOMO for, so this is a good thing, Abhijit. There might be an argument that S&P inclusion is on the way on September 6th, and that's where the FOMO is coming in. And that's not retail FOMO, that's institutional FOMO then, right? So maybe if we get included on September 6th, I still am skeptical because of the institutional volume, but if we get included, oh, there it is, $32 right there. There it is, folks. There it is. And again, that might be the reason it's going up, because of institutions getting ready for this bad boy to be part of the top 500 companies in the United States. There it is. There she is. She was there I saw it for 2 seconds, then it went back down. We'll see if it gets back there. I think it does. Now that we broke the wall, there were some people that sold right at that level. But now that the wall's gone, as the volume comes in, we might be able to sustain 32 throughout the day. Not bad. Congrats. It's been a fun year, right? It's been a fun year with Palantir. It's been a fun freaking year, dude. It's been a stock picker's market. And if you picked Palantir, even, below 25, even at 27, 28, you're up. And it's not been bad. Not been bad at all. All right, good stuff on Palantir. $32. Rocket Lab up 18%, $689. SoFi at $706. NVIDIA at $123. Let's bring on the man who's been patiently waiting to tell us more about wheeling and options and what he's doing with Palantir, NVIDIA, etc. And we'll go deeper into our public portfolio. TJ, the wheel deal. TJ, what's up?
What's going on, Amit? How are you this morning?
I'm doing very well. How do you feel? Palantir at 32.
I feel underweight. I feel underweight, man. I feel underweight. Just phenomenal performance, guys. I've been saying Palantir's overvalued. I've been echoing that for 2 years now, I guess. And I think what it is it's an expensive stock, but it's growing into its valuation. It just needs a little bit more time. They're clicking on all cylinders, dude. I mean, congrats to all the Palantards out there, myself included. I have a pretty big position in Palantir. I just don't. I don't have a Palantir channel because I don't know enough about the company to really carry that dialogue on too much. But I know how to make a lot of money with the company, and I'm thankful to be a part of it. I bought into the Alex Karp narrative very, very early on when he was like, hey, y'all need to rock with this. This isn't going to be like a get rich quick. They're on a mission to do some really, really big things.
Well, and also I would say you consider yourself to be patriotic. And Palantir is one of the more patriotic companies in the stock market.
Yeah. It's really, really awesome. And I'm kind of like in the middle as far as like liberal and Democrat. I call myself a logical. And I like how they have two totally opposite. They're like polar opposites, right? Like Peter Thiel and Alex Karp. But they somehow came in the middle, and they caught a vision, and they're running with that vision, and they're not letting their bullshit politics get in the way.
Right.
But, that is something that is also pretty commendable, because there's so many people, dude, they can't see the forest or the trees. They're like so stuck on the left and on the right. And I'm like, dude, just open your fucking eyes. Like, it doesn't matter what side of the fence you're on. A lot of people can make sense in certain situations. So right. Palantir for the win, man. Palantir for the win. We'll ring the fucking cowbell again, Amit. I mean, this thing is just it has just been awesome. I mean, it's been awesome. I mean, it's the biggest bright spot in our portfolio for sure. But
All right, so
it
let's get
also
into.
shows that cover calls can be a pain in the ass.
Oh yeah, well we'll talk about that and we'll see the positions we have open. But let's bring up the public portfolio. I think we can bring up that P&L statement on it, and we'll start talking about it, and we'll look at your Palantir position as well. TJ sold a ton of Palantir $26 puts before earnings, and he was underwater on August 5th, and then by the end of August 5th, those puts printed really nicely.
Yeah, for sure.
And Palantir right now, guys, 31.90. So we went down to 31.74 after 32. I think we get back to 32, but we'll see if that plays out. I'll let you guys know if we see it. But as of now, basically just chilling out right there at 31.90.
Yeah. So here's where we're at, Amit. We've collected net premiums 113 since we started. We have the open collateral is not updated. I didn't have a chance to update that. We're up about 3,000 on shares that we own. So it's been a very, very profitable venture. And Hood has been leading the charge, guys. We've made $33,000 in premiums off of Hood. We don't own one share yet. Shopify was really good early on in this project. We picked up 74.45. TSLL is one that we're in actively, and that one's brought in 10,600 in premiums. HIMS has scooped up another 67.50. We had a little earnings play on NVDL a couple months ago, picked up 685. I took the L on Path, 3,800 total. NVIDIA, we've actually got 500 shares now. We're up 11,993 on NVIDIA when you calculate all the premiums. Snow was good for 27.50. That's one that I wanted to talk to you about again, dude. I've been researching, and I know that we're Team Palantir on the channel, but it is still it's getting kind of attractive. And then with like Buffett selling out, it might go to levels that might get pretty appealing for us eventually. And then BITX, you got this play from a friend, right?
Yeah, from Adam.
And that one has just been very, very stress-free money right there. Meta was good for 12,900. American Airlines, we've scooped up 10,625 in premiums. We have 5,000 shares of American Airlines at a pretty good price. And then we were up to 300 shares of CrowdStrike, and we've collected 4,900 in premiums. So that's how it all shakes out. And right now we have currently cash secured puts in the money, 302,500. So we're on the hook to buy some shares if things don't go our way, if you will.
All right.
So what I wanted to do for the Palantir community, and really for my portfolio.
We're making a buy. Are we making a buy?
Is we're going to buy 500 shares right here.
Okay, hold on. Before you do it, you already did it. What's the logic? Why are you buying?
So I want to scoop up 5,000 more shares. So for the next 10 weeks, 9 weeks, regardless of where the fucking price is, I'm gonna buy 500 shares on the segment, so I can get to my other 500 shares or my other 5,000 shares. And I'll walk y'all through this here in a second. There's a little method to the madness, guys. So do we have 3 or 4 minutes to talk about Palantir, and I can walk y'all through why?
Dude, we have 3, 4 hours, months, days, years, millenniums to talk about Palantir. So you got it.
So what happened was I got my hand caught in the fucking cookie jar, bro. I'm talking elbow deep into the fries. You know what I'm saying? Like I was in there, and this fucking idiot over here sold $12 calls for January of 2025 that are like extremely underwater.
To break that down for everyone, so what TJ said is when Palantir was $8, he said TJ made a bet that by January 2025, Palantir would not be more than $12. I know you guys might think that's crazy, but sentiment at the time was not the best. He got paid a hefty premium for that. Someone bought those calls. Maybe one of you guys bought those calls from TJ. And now those calls are probably up 300-400% because Palantir's at $30.
They're printing. They're absolutely printing. So essentially I have now 20,500 shares at a 1503 average. So we're doing well from that aspect, but this is a little inflated because I have these cover calls over here. I've got 5,000 shares that are essentially for sale at $12 for the beginning of next year. And then I've also got 15,000 shares for sale at $30 for the beginning of next year, January 2025. These aren't causing any stress. These are doing exactly what I wanted them to do. I'll stay in this trade for another 2 or 3 months, and then I'll roll it out a year, go to like $35, $40 strike. That's easy street right there. This one, however, is not. This one here, essentially, in my mind, those shares are gone. I mean, if I want to take my ball and go home, dude, I'm going to lose, $67,000 on that particular covered call. So I'm not going to do that.
So someone bought this call for $688, and currently the call is worth, I think, if you scroll up, $2,025.
Yeah.
Right.
2008, yeah.
So they're up about 2x on that, a little bit more than 2x.
So this is like Breaking Bad. They won, right? So
They won. Correct.
Essentially, I want to roll this call. I want to roll it to 20. That is the goal. The goal is to go from 12 to 20, January 2025 to January 2026. But if I do that right now, it's going to cost me probably in the neighborhood of about $25,000. So this is just playing the long game right now, like trying to figure out, okay, I'm in this predicament. How do you manufacture the win here? So I'm not going to be able to catch up to the stock on one roll. It's just not realistic. So I'm just trying to qualify to go from $12 in capital appreciation, like as far as that's where it's capped off for me, right? I want to go from 12 to 20 because on 5,000 shares, that's $40,000 of capital appreciation. So I'm like, well, how much would it cost me to do that? And right now it would cost me $25,000. So I'm like, it's not really worth it to me because I'm going to have to give you 25,000 just to be able to qualify for 40. So that's just a net positive of 15. And why so the logic behind it is like, okay, on the other side of the fence, why wouldn't you just roll up to like 30 or 40? Because I'm going to have to look to roll up for a debit. So I'm not going to pick a strike price that if there's a big change in the macros, I have to pick a strike to where like I just don't see Palantir falling to ever again, if that makes sense. Because you don't want to roll a cover call up and out for a debit just to come see your stock come tumbling down because all your capital appreciation is gone. And now you're just looking really, really stupid paying money to roll a covered call. So 20 that's the number for me. That's the baseline. I don't see a world where Palantir is ever going to go to $20 a share again. That's why I'm picking that strike price. But I want to be able to roll for $20 or for 20 grand. That way it's like, okay, cool. I paid 20, but I qualified for 40. So that's still a net positive of 20. And then it gives me another year to try to like catch up to Palantir. Palantir slows down.
Right. So and again, and the reason, guys, he's saying he's qualified for more is because if the strike goes from 12 to 20, that's $8 more a share that he can make on those 5,000 shares. So he'll still make more money, even though he's paying a debit to get out of it.
Absolutely. So that's the strategy there. So these aren't causing any pain. These aren't causing any pain. But I've already started dealing with this. I was early. You know what I mean? I was like, I saw the writing on the fucking walls, and I was like, okay, cool, go handle your business. So around the $20 mark, I picked $20.47. Y'all see that right there?
I remember you made you posted a Twitter video.
I bought 5,000 shares of Palantir at 102,000 or $20.47. The reason that I bought right there was in anticipation that eventually I'm going to roll from 12 to 20. And it's 5,000 shares, not coincidentally. So I'm like, I'm still getting that capital appreciation. It just took more money. You follow me?
Right.
And then obviously those shares have performed well. Those are for sale at $30 January. They're not causing me any stress. It's right where I want to be. I want to play the stock from behind so that I reserve the right at some point to sell these shares for a massive fucking profit down the road. That's the reality. And I have my number to where I'm going to probably sell half of the position. And it's in the, whenever Palantir is at like that $250 billion valuation, I'm gonna take a profit on it unless it's just screaming at me that it is gonna legit do what Alex Karp wants it to do.
I mean, dude, if we get to 250 billion, I want
to be in a position where I have to make some tough decisions. Amit, that's what it's about.
Yeah,
that's what it's about. Because dude, buying the stock is hard. Selling it for a profit's even harder, guys.
Agreed. 100%.
I know that sounds kind of stupid and counterintuitive, dude. I promise you, I've been there. I was there with Intuit. And I was just like, okay, when am I going to sell this damn thing? Because it's starting to turn into a little bit of life-changing money for my situation at the time.
Right.
And so anyway, so now I'm like anticipating more pain on the horizon in a positive way. This is a positive problem. Make no mistake about it for me. So I'm like, well, let me just, instead of buying, because now Palantir is kind of crazy, right? At 31 bucks, 32 bucks. Well, let me just buy 500 shares at a time and scoop up another 5,000 shares. I'm going to manage these calls for the next 3, 4, 5 years. Eventually, hopefully, I'll catch the stock. And then these new ones, well, they're not really causing me any pain anyway.
Yeah.
But I want to have more shares. And one of the hardest things that I want to demonstrate for you guys live here is, dude, averaging down is kind of easy when the conviction's high.
Yeah.
Averaging up is a little tougher for me personally. I don't like to pay more for shares when I bought a lot of them at like $6 over here. You know?
I mean, let me ask you this. Do you personally think Palantir is worth $32 a share?
I think it's going to grow into 50, bro. So it doesn't really matter. Like whenever you average up in a company, you're looking at 3 to 5 years down the road. So I'm not enamored with like, I'm going to wait on that dip. I'm going to wait on that dip. More important for me is share accumulation. I have a number in mind for Palantir, and it's 50,000 shares. So it becomes a question of not now, when.
Yeah.
Am I going to wait to deal with it when it's 40 or 50? I'd rather deal with it now. Hell, I should have dealt with it when it was 20.
Yeah.
Because I thought about doubling the position when it was 20. But dude, I caught a lot of flack because I posted that trade live on X, and it was like there was like 6 or 7 bookmarks on it, bro. And I can't wait, dude. That's the one thing about Twitter, bro. There's receipts there, motherfuckers. There's receipts, and they go both ways. So I'm gonna figure out, is there a way to figure out who bookmarked me or not?
No, you can't see that. You can't see that,
man. Because I was gonna tag all of those motherfuckers down the road because, dude, I caught a lot of flack for that purchase at $20.47, and it worked out. So this was an average up that was, pretty successful so far. I mean, the story's still being told, guys. So we don't want to do victory laps just yet, but it's looking really good for the home team. And I immediately sold those covered calls right here. So I got a 184 rebate if you want. I picked up $9,200. And I put them over there with the $30 covered calls. But then since then, I've made a lot of money off of premium selling cash secured puts, mostly into earnings, and it's really, really worked out so far. And then now I'm like, okay, cool. I want to grab another 5,000 shares, but I'm not willing at these levels to just buy 5,000 shares outright, because what if there is a dip to like 24 or 25 bucks?
Why don't you sell puts then right now on Palantir if you want to get 5,000 shares?
Because it ties up a lot of capital, bro. Like it ties that.
And the premiums aren't worth it, is what you're saying.
It was because I could just sell covered calls against these shares and get the rebate. And it's share accumulation. Like, what's the game?
Yeah.
The game for me right now is I like to get to 50,000 shares of Palantir. I like this to be, top 1 or 2 position in the portfolio. And I'm not enamored with that stuff. I'm always looking at 3 to 5 years down the road. Where do I think Palantir is going to be in 3 to 5 years? It's going to have a 50 in front of it. Or I think it's easily going to be over $50 a share. So am I really going to be stressed out because I could have picked up more shares, $1 or $2 less? I don't play that game. I don't play that game. I'm looking at 3 to 5 years down the road. Is my future self going to thank me for this purchase? I'm hoping that I'm pissed off that I didn't buy 5,000 shares at these levels. Like that's where I think. I mean, because why else would you be buying a stock if you don't think that it's ultimately going up and to the right? Like, it riddled me that. I don't understand it.
Yeah, no, I agree.
Like, I mean, forget about your thesis, dude. At the end of the day, you need the fucking stock to go up, right? Like, to make money. So, I mean, I think that down the road, Palantir, 3 to 5 years, I think it's easily 50. Hell, it could be in the hundreds, isn't it?
I mean, it's just how high the growth rate becomes and how much the TAM for AI expands. And if it does, then I agree with you. It very well could. They need to really put up the growth, but if they've already started and if they keep doing it, this thing is going to be exciting.
Yeah, so I'm just treating this like a brand new lot, dude. That's it. And eventually I'll look to sell covered calls against those to bring some premiums through the door. But the one thing about Palantir for me is that I'm done weeklies, I'm done monthlies. I'll be selling these covered calls for January of 2025, and it'll probably have like a 34 or 35 handle. Like, gotcha. I'm done jacking with Palantir because I don't like looking at it. I don't like looking at it and like over trading it or whatever. You know what I'm saying? I'm like, give me a nice little rebate. I'll sell the covered calls and I'll manage these one time a year, 2 times a year, and call life good. It's essentially a glorified buy, hold, and hope for me.
Yeah.
So that's Palantir, man. I'm super excited. Can't thank you enough, Amit, for all of the research you've done for the Palantir community. It is, I mean, dude, you're my go-to for Palantir, bro. I don't even read an article, bro. I just watch your fucking videos. Like, this is true story. I'm not gonna waste my fucking time trying to make sense of another article or another contract when I can just watch your channel and get the fucking skinny and save myself a lot of time.
Oh, that's the goal. That's the goal. And hopefully that's for everyone. It's easier to condense the information via the video.
Anyway,
all
a big
right.
thank you to Amit on the chat, man. I want to see some thank you to Amit.
No,
I know he saves us a lot of fucking time. Call a spade, dude. You save us a lot of time. There's a lot of value here.
Well, it's good. I mean, look,
on CNBC and wait for Alex Karp, hopefully, to show up on Kramer's channel 3 years from now. They don't like each other. It's evident. It's not going to happen. And he doesn't do that many interviews. So it's real hard for us to go get that information. It's not that readily accessible. So we count on people like you that have dedicated a lot of time and energy into covering this company, dude. You're essentially a pseudo Palantir analyst, kind of.
Yeah, I guess so. I appreciate it. I appreciate I appreciate the gassing up on a Friday. This feels good. I don't think Karp's ever going to go to Kramer, by the way. I think he's like just not.
They don't like each other, bro. I like to for them to fight. Can Karp fight or not? He's too nerdy to fight, right? They'll just like debate each other.
He'll intellectually dismantle him. Okay, let's go to some of our positions. Let's go to Robinhood because we made some moves yesterday on that. And
yeah, let's start with Hood, man. This is definitely one that I feel like I should have pressured you on a little more. We should own shares already.
Dude, at 17, so when you were on last week at 17, it went to like 18 for like 20 minutes. Yeah. I kind of wanted to be like, let's just buy 5,000 shares, but I also was not sure about the retail sales data and the jobs data. Both of those pieces of data is the reason why Hood's okay and the market's okay. But if that data came in bad, that would have been a little tough.
Yeah, but it's just my challenge.
By the way, Palantir 3209, folks. We broke out 3209. There you go.
Hey, so my shares are profitable already?
Shares are profitable already. There you
Sweet. What I want you to start looking at there is I want you to start looking at 3 to 5 years down the road when we look at acquiring shares, because it makes it easier for you to pull the trigger on them if the investment thesis over the longer period of time is intact.
I agree. I agree.
Bro, it's fucking exhausting, dude. Like,
no, I agree. And I did make a mistake. I should have said, let's get the shares, but we had the puts and the puts were under pressure. So it also kind of felt
we're making money. We're making money. So it's like, you don't really have to explain winners too much in this business. But what I'm saying is, if you believe that this thing ultimately is going up and to the right, at some point you do want to allocate some money to share ownership as well. Versus like, we just keep like buying long calls and doing all of that stuff too, but all of that stuff expires. Yeah. If you have a good solid company, like I think that Robinhood is growing into something that is noteworthy. And I think all the analysts agree. I think there's only like a couple of them that are super bearish on Robinhood. For the most part, they're all drinking the Kool-Aid right now.
Yep.
They've all forgotten about 2021 and the buy button or whatever the hell happened over there with Citadel. I'm just saying, like, that shit is turning into old news, right? Like, people don't even really.
No one gives a fuck anymore, dude. No one gives a fuck.
Yeah. She cheated on you. You moved on. You know what I'm saying? So y'all don't want to bring it up. It's a topic that people don't talk about, right? Like, it happens in relationships, and it is what it is.
No, but it's funny whenever anyone brings up the GameStop stuff. I'm like, dude, the whole company has changed. So you just have done no research, which is good for me because that means there's still like alpha there because the story's yet to be figured out.
Yeah. No, for sure. So what we did is we rolled some cash secured puts yesterday. We went from 20 to 20. We kept the same strike price. We kicked the can down the road. We went from an 8/16 expiration, which was today. We kicked the can down the road 2 weeks and picked up $4,400. And then we had the $17 puts that we had sold last week on the live. And that one really, really worked out. We're already at like 83%. So I already knew the answer. It was to close it out.
You closed it out. Okay, perfect.
It didn't make any sense economically, right? So we picked up $26.50 August the 9th, which was last week. And we gave back $400. We locked in a material win right there of $2,200 or so. So it's all about these puts right now. So now it just becomes a question of, are we going to be okay taking ownership at 20, or are we going to keep playing this game? Like, what do you, that's a decision that's up to you to make. I'm good either way, dude. Cash secured put premium, covered call premium, capital appreciation.
Why don't we ask the chat, guys? Should we buy?
It's all cash at the end of the day.
Could we buy 2,500 shares to get started in 1970? We missed 17. I don't know if we get that back. If we get it back, we'll just buy another 2,500 and DCA to 18.
Yeah, but I mean, if you buy them at 19 and you sell covered calls, it's kind of like you got them at 18, right?
That is true. What do you guys think? 2,500 shares at today is a good idea or not? But the covered calls, we want to do 22 strike? That's the one you like?
Well, we just have to do something that gives us that rebate. You see, whenever you do what's called the buy right strategy, is you're like, okay, this is where they're trading, and this is where I would like to buy them.
Yeah.
So my target for Palantir was 1750. I said it on the spaces yesterday.
On Robinhood, not Palantir.
Yeah, like I've been studying this a hot minute now, and I'm like, dude, if I could really build a position at 1750, I'm sleeping well at night. But I don't know if the market's going to give us 1750 again. I don't know. Maybe it may give us 1250 for all I know, right? But from my valuation perspective, 1750 is good. So there's a way that we can just buy these shares, sell covered call, and it somehow mathematically looks like 1750 on paper. I'm cool with that. Or we can just keep selling cash secured puts and stacking up the win that way. There's no, dude, I don't care about ever own these shares. If I end up making $500,000 on Robinhood, I don't really care how it happens. I'm not that picky. The $500,000 is going to be $500,000, but that's like I've already put in my journal. I think that there's $500,000 for us to make here with Robinhood. We just got to structure it accordingly.
Well, what's the stock right now? If we buy 2,500, what's the stock?
We just got to do the math. What is?
No, I'm just go to the ticker. I just want to see what the price is right now. It's like 19 something.
Shit, I don't know.
1976. Yeah, dude, I mean, it's funny because if when we went to $24 and if we came to 19, that's a great dip. The problem is we went all the way to 13, so 19 looks a little aggressive, but it was never supposed to be at 14, 15, in my opinion, either.
So you see, this is the way I think about this stuff. I'm like, okay, cool. We pick up 2,500. If it goes up, we don't pick up any more. If it goes down, we're able to pick up the other 2,500. Let's say practice the 12 where you're sitting there at 15. You're there.
I agree, dude.
And that's just the way that I look at it, guys. This is not rocket science to me, guys. Making money, you're making it a lot harder than it is, guys. Like you're making it a lot harder than it is because you're too damn enamored with being right. Let me tell you something. Being rich is a lot more fun. I'm going to say it again for the people in the back of the class knowing you so well. Being rich is a lot more fun than being right. Like get enamored with being rich. You know what I'm saying? Like, you really think these big time hedge fund managers are fighting over 2 and 3 cents and $1 even?
That's the other thing. Like 1750 is awesome, but 1750 is not $25. 1750 versus 19.7. It's $2. We DCA, we get to 18. Sell a covered call. Your average is 18. It's not something to like. This is not Nvidia at 100 versus Nvidia at 140. You know, those are two different elements to buy. All right, let's do it.
So what do you think? You want to scoop these shares in?
Let's do it. Let's scoop it, and then we'll sell some calls and see what premiums we get on it. Palantir, by the way, guys, 32.14. We are breaking out. Robinhood Hoarder is in. 2,500 shares. We are officially in this stock. We have not been in this stock. It's only been options. We now have shares.
Awesome.
That's a big deal for you, TJ. You've never had actual shares of Robinhood in the port.
I'm not, dude. I'm not. Yeah, it's exciting. I mean, dude, I've already got a dedicated page to Robinhood over here, dude. So this was like meant to happen. You know what I'm saying? Like when I asked Bill White to like, hey, give me an entire page dedicated to Robinhood. I mean, at some point I should own some shares. So now I just got to go over here and put the.
While you're doing that, 32.14, guys, this is incredible. Congrats. 32.15. I know it's fucking crazy, but it is what it is. It's happening. Palantir up 3% on the day. Year to date, Palantir is up 90, to be exact, 89.6%. And the day's not over yet, so we'll see if we can keep going from 32. But this is fun. This is definitely very fun.
So we're up 5 cents on the shares according to this thing, man. We're doing great, bro. What do you want to do? Do you want to do on a covered call? Do you want to let it run a little bit?
So here's the thing about covered calls, dude. I think Robinhood is 25 by the end of the year. So I feel like we're going to be in pain with some of those covered calls, unless we're unemotional. And if you have to sell it at 21, you kind of don't care.
Yeah. So this is a real good teaching segment, guys. Like, what is the objective, right? The objective is to lower the adjusted cost basis because we didn't really get the entry point that we were looking for. And the stock going up, and we have no intention of selling these shares anyway, it's going to be an unrealized gain. So the only way to stack your paper and to stack your individual cash is you need some realized gains along the way. So we can run a successful 3 or 4 covered call campaigns. That's a material win for the portfolio, and it's a realized gain, which in my opinion outweighs an unrealized gain by far. And so I think that it is important whenever you do this and you're buying, quote unquote, at the top, it's important to bring that cover call premium through the door because you're going to manage that anyway. And then we're wrapping it around with cash secured puts. We've got 100 of them at $20. You know what I mean? Yeah. And we can just we're making money on both sides of the fence now, is what I'm saying. Because here's the thing, Amit, and this is what it took me probably 3 years of doing this full time to realize, is you can't make any money watching stocks. Like you gotta have to take action somewhere.
So I agree on that, but if we think Hood's making a run towards the rest of the year, do you still think it's smart to sell the covered call, or do you think we just let it chill?
Okay. Yeah, they'll manage it, dude. I don't mind following this covered call for the next 3 to 5 years. So what does it really matter?
Okay, so let's look at the premiums. Let's see what we got.
Like, I mean, I'm long Robinhood already mentally. It didn't really take these 2,500 shares to get me there. I mean, it's cool that it happened. Oh, wow. It's at the very bottom on equity.
All right, so let's look at the option premiums and the covered calls. For those that don't know what a covered call is, we are essentially agreeing to sell 100 shares. You need 100 shares per contract at a certain strike, and the market, aka a buyer, is willing to give a premium that we are selling to them. So they're giving us the premium to buy it from us in order to buy that call, aka us selling them that covered call. The reason it's covered is because you have 100 shares of collateral that's dictating the call itself.
Right. So this guy here, the $21 is paying us 28 cents. So it's almost like we bought him for $19.50 now. So, we do something like this 4 or 8 times over, we're right there in that $17.50 range. And and if we have to roll these, we go from 21 to 22, 23. What's the highest that Robinhood's been here recently? Like
24.50.
So it is what it is, So I'm thinking if you want to be real conservative, we can go over here in the 22 range just to sprinkle in some premium. And I just have a hard time believing that by the end of the month, this thing's at $22. That's just me. But I mean, they just released data yesterday, right?
Yeah, look, again, the thing is they have a lot of catalysts. Jackson Hole is coming up where the Fed talks. If the Fed is bullish, then a lot of things can run. So I just don't like these premiums, TJ. This is not.
Yeah, well, they're not super juicy whenever you're only going 2 weeks out. Where it becomes a little bit more interesting is where you're going like a month out, because then now they're gonna make it a little more enticing for you,
Yeah, but in a month.
I'm not really seeing anything that's like going to really move the needle in either way. So I think it'd be really cool. Let's let it run to like 21 or 22. And then we try to pick up some premiums that way. And then we're also up at that point, granted, because it's 2,500 shares, right? So every dollar is $2,500.
I agree.
So yeah, I think we can just let it, I mean, it's only 50 grand, right? So it's not going to move the needle for the portfolio really in any way right now. But I do like that it's on the scoreboard. It does create conflict for me, though, because now that's 13 stocks. And I don't like that number. So,
I got to sell out of something.
Is there anything else that you like that we could buy like a share of? Just to have 14. But there's that. What else do you want to talk about, man?
Let's talk about NVIDIA. So what's going on with our NVIDIA position?
NVIDIA, man.
Bouncer 3220, folks. 3220.
And I can't believe I bought shares and they're actually going up. This never happens to me, guys. Like I thought I was going to tank the stock right now buying those 500 shares.
3220. Nope, that helped.
So NVIDIA is looking a little bit better now, Matt. We're up to 500 shares here, and we got an average cost of 125. So we're approaching break even on the shares. So these cash secured puts over here for the end of the month are printing. We're up collectively 73% on those. So we could free up a lot of capital here if we wanted to look at, giving them back $3,800, we could free up $10,500 10 times over and $11,700 7 times over.
So let's look at the 105 put and see how much we're up on that one. So this is a cash curve put we sold that NVIDIA wouldn't be 105 by August 30th. We're up 80%. I think we closed that out.
Yeah, agreed.
So what we're doing here is we're buying to close. We are collecting 4,100 in premium, which is 78% of the overall premium we collected. So we're giving back 22% of the premium. And we're freeing up about 100 grand of collateral. The 100 grand comes from 10 times 10,500.
It's right there, yeah. 105,000 in collateral. Pretty crazy. And there it is. And that frees up buying power. It gives us more opportunities. If we want to go ham on Palantir or on Robinhood, there's more money there now.
Yep.
There's more money there now. So.
And then the other put is 117. Let's see how that one's doing.
I want to challenge you a little bit though.
Okay.
Because you challenged me because I wanted to sell covered calls against Robinhood. I wanted to utilize the buy right strategy. But you sound very convincing. You're a debater, right? Like you know how to make arguments and you make people believe shit that they don't even really believe. So
that's how we got the world to buy fucking Palantir at $6. I was like, guys, there's something
what I'm
about
saying is if you don't want to sell covered calls on Robinhood because you think that it's going up and to the right,
correct.
Why aren't we buying another 2,500 shares of Robinhood?
I mean, I do not think this stock, I think the stock is closer to 30 in terms of its actual value for the growth that it puts up. So I don't have a problem with that. If we want to do that, let's do it.
I'm just saying, you know what I'm saying? You want to sell covered calls because you're convinced that they're going to go underwater. Well, then why aren't we buying more shares?
Well, so here's the thing. If we get to 5,000 shares of Hood, then we just have to be ready to make that a 10,000 share position if we get a dip to 1750. If we don't,
Robinhood in my journal, bro, it's already at 25,000 shares. I just got to figure out how the hell to get there.
Really? So you personally, you're 25,000 in your head. You're like, I like that for Robinhood. Okay, yeah. Let's do it then. Let's buy another 25. Let's do it.
I like it.
And I think the next 5,000, if we get 18 or below, we'll.
Now this is getting fun. Now this is getting fun because this moves the needle, dude. Like this moves the needle.
Yeah, and again, when I was buying at 17 personally, and for like my mom and dad, I feel like I also should have told you and just like made it a bigger issue because it was one of the easiest dips that I was buying this year. But our puts were in the money, so I felt like there was a chance we get a sign, so I wasn't too worried about getting shares. But obviously, it's rebounded pretty well, so we need to actually have some shares.
And guys, I don't want you to feel like I don't want you to think like, oh, teacher's just being really cavalier and irresponsible. I have a number in mind that I want to get to with share ownership, and this is just the first bullet. And I don't care if these shares go down. In fact, I would prefer that they did.
Yeah, if we get, because the risk reward gets really exciting if they get back to 17, 16. So I agree with you. That would only be attractive to me.
Dude, this thing goes to 15. We're doubling the position down there at 15, and you're at 1750, right? Which is again, when I have a valuation metric in mind, everything that I do at that point is going to be tailored around trying to get to that metric. And I want to have an average cost on Palantir, not an adjusted cost basis. I want to have an average cost of $17.50. So I'm really, really hoping that a Robinhood, I might have just said Palantir there. I want Robinhood to go to like 15 so that I can scoop up 5,000 shares down there. And that puts me in that 1750 Goldilocks range that I'm looking for.
Right.
But if it doesn't happen, then this position is probably not going to get much bigger than where it is right now.
Yeah. Someone says, serious question. Hypothetically, what if September 1st we have a recession for 6 months? Do we sell now or just leave it and hold? We've talked a lot about macro on this show. I think there's a chance for a recession. I think it's unlikely given some of the data we're getting. But in general, if you sell now and try to get in at the bottom, the time to do that was July 16th and then get back in August 5th. I don't know now with the data we have, Palantir at 32.30, if you can do that again, because I don't think Japan's going to crash like it did in 1987 again, you know? Right. So I'm long. It's hard to time it from those levels. 32.30 guys on Palantir. We'll go to SoFi in a second and see what TJ is doing there, but this is pretty incredible. I definitely think there is some level of institutional investors coming in because of the S&P inclusion potential on September 6th. That could be the run, or the run could be purely retail, just thinking this thing's going to the moon. We got to get exposure. It's one of the two, maybe a little bit of both. But if you have a big Palantir position, you kind of just sit back and you enjoy it. I mean, you just enjoy it.
Agreed. Did we finish with NVIDIA though?
Yeah, we have to close out the put. Yeah, 117. So let's look at that one.
So we have this one right. Or this one. Hold on, let me go this way. So we have these right here. I just rolled these recently, by the way. These were set to expire today at 118, but I saw the writing on the walls. I looked at the charts. I didn't even bother getting a hold of you because I knew you were going to want to do it.
Yeah.
And I want to build more money on the premium side, So I rolled these from 816 to 830. I went from 118 to 117, and was able to pick up another 1,645 in premiums for us.
So you're already up 80% on the rolled call.
Yeah, this is all together.
Do we want to close?
So keep in mind, I picked up 1,645 on the roll.
Yeah.
So essentially, we'd have to give back all of that money back, and then we're essentially giving $1,200 back from the initial cash secured puts, which would have really worked out for us. I mean,
so I think we just let this one expire then, August 30th.
Yeah, I think we can deal with it next week. Maybe we're up at like 80%, and then maybe we're only giving back, 1,400 or 1,500. That way, we still have something there on NVIDIA that we keep managing. If there's a little bit of a pullback, well, then now we'll be underwater on these. But then it's NVIDIA, right? So we can look to add more shares of NVIDIA because we're only sitting on the 500 shares.
Yeah.
Now,
TJ, you are already up on your 500 shares, TJ, 32.40 on Palantir.
Oh, really? Oh, cool. Yeah. I'm not going to tell any cover calls on those right now because I don't feel like, getting my scuba gear and dealing with being underwater over there.
All right. So what's the next one? Maybe we talk about.
I was thinking this one right here.
All right. Let's talk about CrowdStrike.
So first position on CrowdStrike is I bought the dip, and you did too. And then I got the idea from watching your channel. So I thought it was a good idea to buy 100 shares at 280. This was when it started tanking, remember? Because this was like in 300 and something, right? Not too long ago.
Yeah.
So I was like, well, let me just throw a feeler bet out there, and I bought 100 shares at 280. Before that, I had sold some puts at 270. So sold 2 contracts, got 1,300, bought to close them out, gave back 640. So made a little bit of money there, $600 or whatever. And then I bought the shares outright, sold covered calls on those shares, got 1125. So I got a nice little rebate there. And then started selling puts on CrowdStrike, got $900 at 250. Sold a put at 215, got 420. Did a put credit spread on Palantir, got 750. Then I bought another 100 shares at 210 because this is when it really tanked. I mean, shit was going really bad very quickly. Talking about lawsuits and all kinds of crazy shit, right? So then I tried doing other stuff here, couldn't make it happen. Then I sold another put at 215, got 1,045. Then I bought to close that covered call, gave back $23. Sold another covered call at 250, got 930. Put credit spread, got 375. Bought to close the puts, gave back 300. Then I bought an additional 100 shares at 247. Sold covered calls, bought to close the puts, rolled covered calls. So that's where we're sitting on CrowdStrike. So we look at the actual position now. There's 300 shares at a 246 average. So we're up on the shares. And I've got the shares for sale in September at $260. And I'm just like, well, I'll manage those. It's whatever. I know earnings will happen before then. I'm hoping that there's a massive pullback and there's like a flash crash. Like I always have fantasy scenarios, right, in my mind. And I'm like, dude, I won't hope this thing crashes to like 210 again. And I like to scoop up at least 200 more shares. And then I'll ride the rebound on those or the bounce on those because I like to be long on these shares, but I wanted it to be a more material position, like a position that I would actually like open and look at on a regular basis. So what do you think about it so far, dude? I mean, we come a long way from buying the first batch at $280.
I like it because a lot of the firms came out and they said, hey, they're not going to be in trouble. So if that's the case, maybe there's a little bit more downside here, but I don't think we get below 200 like we got on August 5th again. And we probably don't see 400 anytime soon, but it's definitely a position we can sell calls on. You and me are not emotionally attached to this one at all. So if those get called away or anything, like, yeah.
I don't know enough about the company, to be honest with you. I just feel like it's an important company. It showed its importance when shit hit the fan with the airlines, right?
Yeah.
But at the same time, I'd like to build it to 500 shares, but if these shares get called away at 260, also, like if I just don't want to manage the position, when I want to get back down to 12 stocks instead of 13, like, dude, if these sell at 260 and we made money and we moved the capital elsewhere, like, I'm okay with that scenario as well.
Yeah, I agree. That's fair.
So
very fair. Okay.
What about American Airlines? That's another one that we've got.
This one's a bit of a boring one, but we just have 5,000 shares on this, and you have a bunch of calls on this, I believe.
Yeah, but you said something really, really critical there. You said it was boring, right?
Yeah.
Yeah, boring stocks make you the most money when you're selling options.
I agree.
And they cause you the less stress. You know,
cause you the less stress. That's correct.
You know what else has been boring for me?
SoFi.
PayPal.
Oh, well, PayPal. Yes.
PayPal has been really, really boring. I made 6 figures on PayPal. I love PayPal. It's boring. Premiums are boring. They're okay. Sometimes they're reasonable. For the most part, they're kind of dull, but it's steady. I mean,
I think the best stock to wheel is a boring name that's not super volatile, but it's a fundamentally good company. Like American Airlines, they have a couple million people go on their flights a day. They're not going anywhere. PayPal, 400 million users, they're not going anywhere, right? I agree with you. Now, you're not going to get 5% premiums a month from this type of a stock, right? Maybe 1 or 2% if you're really good. But still, it's a good stock.
Yeah. So scooped up 5,000 shares at 987. So that part's good. A little bit, make money there. And then we have 50 cash secure puts at 10 and 50 cash secure puts at 1050 that babysitting for the end of the month. So it's, obviously I'd like for it to push up a little bit. That way we can look to redeploy that capital, maybe somewhere else that pays like a little bit more premiums, maybe move these monies over to Robinhood eventually. Because this is where we can find the money to build out a position that's a lot higher conviction. We think it's, going places, if you will. Obviously, these guys go places all the time. There's a lot of people that ride in airplanes. But the actual stock itself, I don't know if it's going to go anywhere anytime soon. It doesn't really have a reason to. But the premiums are actually decent. I mean, like, they're not horrible, dude. I mean, if you want to look at this $10 put, sold these on 8/1, so it was a 1 month deal, 50 contracts, and picked up 32 cents. So you tie up however much capital that is, $50,000. Yeah, $50,000, and it pays you $1,600 for the month. What kind of return is that? It's actually pretty decent.
1,600 for 50 grand. That is a 3.2% return. That's a 1 month contract. Yeah, 3.2. That's not bad.
Right. So that's why I want to harp on this boring. There's a
I agree with you.
Being made with boring stocks, guys. Like, y'all are just like, we're enamored with the shiny object syndromes in this society and in this stock market. But dude, who's not going to take 36% a year? I mean, you're crushing the market.
I agree.
And in American Airlines at $10, you can also argue that's, you're probably not in a situation where you're going to lose your ass either.
Yeah, American Airlines at one point it was at 20, right? It's been it's been stuck at those levels for a while. Yeah, it's over the past 5. Its top was 29 in 2019.
These are COVID levels. These are COVID levels for American Airlines right here.
Yeah, exactly.
So I like the risk reward here. Is there a lot of fundamental issues with the airlines? Dude, these are money pits. Like, it's like the cruise lines, dude. I mean, unless you're Chris Patel and really digging into the weeds, it's real hard to find compelling arguments for these types of industries because they're very capital intensive.
Okay, I have a trade for you. I just got an idea. I think we double our BidX trade.
Yeah,
because
I like that, Amit. I like that a lot. Now I have a different idea though.
okay.
Why don't we turn it into a covered strangle? And how many shares is it? Why don't we buy 2,000 shares of BitX and sell covered calls against those shares over there in 2025? And we've essentially turned it into some sort of a spread down there for 2025.
I don't like that either. But before we do that, can we see the premiums on, because the premiums on the puts are great. I want to know if the call premiums are just as juicy.
The premiums on puts are great. The calls are going to be the same, bro. That's
okay. Let's see. Because for those that don't know, BitX is a 2x leverage Bitcoin fund. We have $24 puts, basically saying by January 2025, Bitcoin's probably above 60,000 ish. Which I think that'll be the case. We got paid a 30% premium, which is 5% a month because we did it a couple months ago, which is pretty damn good.
Yeah.
So if we were to buy shares on the call side,
and then we sell them at 30. We're
bringing
in 610. This is like scooping these shares up at $20. And it's a mathematical certainty that you're going to win both sides of that trade. It's a possibility that you win, or you're going to win one side. It's a mathematical certainty. And it's a possibility that it's the Goldilocks zone and you win both sides of that trade.
Now, real quick, let me just say this is leveraged Bitcoin. So TJ and I both know that if Bitcoin tanks, this trade goes in the garbage. I mean, if Bitcoin goes to 29,000, we're gonna have to roll it basically for 2 years.
I'm not in that camp though, dude. I think that we've got a good run ahead of us in crypto.
I agree. Well, that's you only do this trade, or you only get into these kind of ETFs if you think Bitcoin or the Bitcoin miners, whatever, will do well.
So, I like it. So what do you think? Scoop up 2,000 shares, sell the covered calls, and then if we hit that spot, dude. I mean, this is a very, very profitable situation for us.
Yeah, I like 2,000 shares. Also, I like it because we sold our puts when this thing was at like 35. It's at 26.
Right.
And so I think we have some decent margin of safety here as well.
Yeah, I like it here. Buy.
Also, you will get it. I don't know what the dividend. You're going to get a dividend on those 2,000 shares as well.
Oh, that's cool. Yeah, and Intel was paying a dividend until they're not. I think they got one more quarter, and then they're not doing it anymore.
Yeah.
So there's that. So then now I think the other thing becomes to I don't know how to find it again.
So what? I like $30. That's a decent trade. We might get to $30 tomorrow too. So it's like, I mean, if Bitcoin, Bitcoin's candles are crazy. So
yeah, but this is very emotionless.
I agree. So
premium capital appreciation. You do the math on it. We're making a hell of a return, and this isn't anything like, oh, we're rolling this to 2029. I'm not losing these shares. Dude, take them tomorrow, bro. I don't care. Those are the easiest stocks to wheel when you're like, you don't give a shit. This is just a money play. So there's that. So there's the actual shares. So now we trade options on it. Sell calls to match up the January 2025. And it doesn't have to be 30. Do you want to go 32? Like, where are you at with?
I want the most premium. I don't, again, because we don't care about the shares.
So 55 delta. So it's saying that we're not going to own these shares. Do you want to go 30? Like, what are you thinking? Because there's not a big difference in premium that you're talking about.
Yeah.
And then we get a lot more upside over here at 32.
Yeah, let's do 32. That's fair.
And then it's going to be 20 contracts, dude. So it's 20 contracts. So this is essentially just like getting a rebate on your shares.
So let's be aggressive here because BitX ends up filling nice. Let's do 620. Let's be aggressive. Let's see if it even has it. If we get the low or the medium.
Yeah, it's low. So let's just
try 6. Try 6.
It's gonna 6 will give it to us.
Let's see.
Did I do that right?
Oh, there you go. So that's 12 grand. Let's see if it fills.
We'll give it time.
We'll give it time.
Move on to the next one.
BitX, I remember I put in an order to get like 800 in premium. Robinhood gave me 920. Everyone's like, Robinhood has shitty fills. I'm like, dude, maybe sometimes for you guys, but for me, the fills are pretty amazing. I was like, thank you for the extra $120, Robinhood, in premium. I didn't expect
we'll see him now. We can always turn around and do this thing. You see, it's like 4 to 6 now. We're obviously at the ask, but that's not going to happen right this second. Right. But we know that we can go in there and get it done at like 570, 580 later. And again, it just doesn't have to happen today. It does, and we can wait. Hopefully, there's a nice little run because sometimes Bitcoin runs on the weekends here recently. Maybe we'll end up doing this one on Monday or Tuesday, and we pick up 620, 630 on it. Who knows? So
Palantir at 32.01, guys. So we fell from 32.40. It's trying to maintain that 32 level, but it is down right now.
I mean, it's Friday. Typically, there's people like the day traders and stuff. They don't like to be in contracts over the weekend. So I feel like the market in general tends to sell off a little bit on Fridays. So I'm pretty happy that we've had this performance right now, but I don't really expect it to hold personally.
All right, so let's look at SoFi. I know you got a covered call there that's under a little bit of pressure.
Yeah, so this is the reason SoFi's up, because I sold covered calls on.
I wonder if you actually get it called away, dude. At SoFi, it's tougher to maintain 7 a lot of times. But
there's no way, dude. Mathematically, first of all, it's out of the money. So mathematically, you would have to be very low on the IQ pool to take those shares away. You're good, baby. To take those shares away from us right now.
Oh, and this expires August 30th. It doesn't expire.
Yeah, August 30th. So I sold these a couple days ago on August 14th. Picked up 7,000 or 14 cents, and it was on 500 contracts. I could do it in as many as 2,500 contracts, but this was just kind of like me trying to anytime I sell covered calls on SoFi, it seems like they go underwater. You know, it's just like I don't mind dealing with that, because then that means that the shares are recovering. And so that was the strategy there, and I'm going to let it ride. I'm going to let it ride until probably the week of, and then I'll look to roll them out a month and go from like 7 to 750. And then at that point, I'm sleeping easy at night, because the average cost on the whole lot is 774. So I'll be a lot closer to that. And then I bought a lot of shares in the $5 and $6 range in this portfolio. So, it's kind of whatever. And then there's a bunch of puts. $8 puts, 1,000 of those for January, 1,000 puts at 7, and then these are all the leaps. 600 of them at 10, 200 at 7, 200 at 5 for January of 2026.
I think that $10 leap hopefully should print.
It's underwater right now, though. It's underwater right now. I think I'm down like 30%. Yeah, 32%.
Yeah.
So I want to eventually get this position up to 1,000 leaps, because these are my lottery leaps, right? These are the ones that have SoFi somehow decides that they want to give Anthony Noto those performance bonuses. I mean, this thing can make a shitload of money for us.
Right.
But right now, I'm not selling any covered calls against any of this stuff right now, because I just feel like there's one more quarter, dude, and the SoFi's got that full year of GAAP profitability. Hopefully, Galileo starts performing a little bit better, so they can command that hybrid multiple. And if that happens, things could look really good. If not, well, then I have to really, probably by the end of 2025, I would really have to consider the investment thesis, because even though the premiums have been pretty good on both the cash puts and covered calls, at some point, those are crumbs. The loaf is the capital appreciation. So I would have to go after the capital appreciation elsewhere. I'd probably get rid of all the shares, turn them into leaps, give it more time, because I don't want to just bail out completely on the company. But then I'd have to take those monies and put them into something that's ready to run a little bit sooner.
Yeah.
So there's that, man. Can I get your help on one of them?
Yeah, let's do it.
This one's not really part of our deal per se, but it's a position that I've been trying to build for a while. And this is Amazon.
All right.
So I'm up to 500 shares of Amazon. So that part looks good at 160. You remember whenever I told you that 160 was the number a couple weeks ago?
Yep.
So I executed on that. I'm already underwater on fucking cover calls. I'm already underwater over here at 175 for October. What are your thoughts on Amazon? Because I know y'all were talking about big tech on that Twitter Spaces yesterday.
Yeah.
There was one gentleman that was really enamored with Amazon. Dude, it's my favorite company of the Mag 7.
I agree.
But I've never treated it as such from an investment perspective, because it took Amazon a long time to learn how to make money, right? To make a profit.
Yeah.
So it was just one of those things. And then just another thing, this is just on a personal note. I'm just not the biggest Jeff Bezos fan. So that's something that has clouded my judgment, if that makes sense, right? Because we're human beings, so we all have personal biases. Yeah. And I've seen 3 or 4 interviews of Jeff Bezos, and it's I'll like him a lot, and then I hate him a lot, and it gives me a lot of mixed emotions.
Well, do you like Amazon over Tesla as one of your better Mag 7 picks?
Yeah, I do, probably for like the next 2 to 3 years, but I think eventually when all the verticals hit for Tesla, I think Tesla has something that could be very, very special brewing. But the biggest issue with Tesla for me has always been Elon Musk. He's the bull case and the bear case.
Yeah.
And there's obviously a lot of execution risk with Tesla as well.
Yeah, dude, I like Amazon, and AWS is incredible, and I think AI is only going to fuel them more and more and more, especially with what they're doing with advertising and the AI cloud part of AWS. I think it's one of those things where you have to decide, do you want this to be a staple of the portfolio, like a PayPal, or do you you're unemotional, you'll just keep wheeling it? And I think you kind of want it to be up there with.
No, I did, because if we look at, if I go over here to, if I put these guys on equity, it is on equity. So we have SoFi at the top, PayPal's over here. And I like to end this segment talking about PayPal, because boring can make you money, dude. And then obviously Palantir's up there where it belongs in the top 3. Then I've got Riot, because I'm very, very bullish on Bitcoin for the next, 12 months or so. So this is not, I mean, it's already been a long-term hold for me, but I am looking to get rid of these shares in the $20 to $25 range. So whenever there's like a massive pump, I want to lock in a win. That'll put me over $3 million total with the Bitcoin biters if I'm able to sell these shares at 25 bucks. So I'll be very, very happy with that. Biggest win of my career so far.
Yeah.
And then here's Tesla. So Tesla's up there. And then I've got Intel, got caught big.
Can you zoom in on these as well, TJ? So we can see it.
On which one?
Can you just zoom in on the, just in general on the screen?
Like that or no?
No.
That
on your actual portfolio screen.
Let me see. Like to make it bigger, like this?
Yeah, there you go. Yeah, exactly like that.
That help?
Yeah, that helps. There you
go. Okay. So then there's Neo. This is my swing trade that's taking a lot longer for it to pan out than I thought it would.
So what's your average on Neo? Your average is okay. So you're a little underwater on this one.
Yeah, 468. And
then when do you want to sell this one? At like $5-6?
Yeah, no. So I have these cover calls at 450. And I'm totally okay doing that because I have leaps, and I want to turn this into 1,000 leaps and play it that way. I don't want to actually own the shares. I want to own leaps because it's less capital intensive, and I'll just run the poor man cover call campaign on it. And my exit price for Neo is if it can get back to 750, and I think that'll happen in a year and a half or two. Make a shitload of money on it, and I have an adjusted cost basis. After the next round of calls and puts, will be under $3. So I feel like it's going to be kind of hard for me to lose money here.
Right.
But at the same time, I don't recommend this play. You know what I mean? This is something that I have a very, very high risk tolerance. I don't recommend that. And then these are the other ones that I'm trying to graduate to investments. When it becomes an investment, in my mind, is $250,000. So we have obviously Hood, Open Doors, a swing trade. And then now I've got all of these companies over here that I'm actually excited about, with the exception of BITX, straight up trade, right? Like that's just a straight up trade on Bitcoin.
Yeah.
So we have Amazon, CrowdStrike, NVIDIA, and I can even throw American Airlines here. Like I feel like all the stability is on the bottom of the portfolio, if that makes sense.
Yeah. That's a good point. I think in the next year, Robinhood, Amazon, CrowdStrike, and NVIDIA probably get into the top 10.
Yeah, agreed.
And maybe even American Airlines if that just continues to be a boring stock that you can keep accumulating.
Yeah, because let's end with boring. Do we have another minute or so? Let me show you all what boring looks like. So this has been boring for me. Got 10,000 shares at 58.79, but up quite a bit on the shares. And then we've also got 1,000 or 100 leaps at $50 that I'm running the poor man covered call. And then these are the this is where we're at with the return from the leaps and the cover call campaign. So the cover call campaign is actually stressed out right now because these are in the money and it's for the end of the month. So that, that's something that I have to address. I'll have to look to roll these here in the next week or so. And then the leaps, I believe they're probably doing okay. I haven't looked at these in a while.
Dude, the thing is,
Yeah,
I
like
think
51,000 on the leaps, bro. Not bad.
I think PayPal's going to do so well because they're buying back so much stock.
That's my bet. That's
So
everybody's bet.
I think
right?
I think PayPal's going to do. It might just take a year, but dude, this thing, I think this thing is 85, 90 after the buybacks.
Yeah, but there's a lot of fatigue already because there's people that have been underwater for 2
Oh yeah, 100%.
and that's also the reason that it takes a while for it to like really catch fire, because there's so many people that have this mindset. As soon as they get to break even, I'm out of there.
Yeah.
Like they're just they're tired, dude. Like they're tired. They're tired of dealing with it. They're tired of seeing it in their portfolio. Yeah, and it happens, it happens. It is what it is. But for
you recovered a majority of what you lost on August 5th, essentially, and you've been able to rebound pretty well.
Yeah, I'm actually still down. Let's look at it. It's been a good week. Yeah, it's been a real good week.
You're up a house in a week, which is good.
Yeah, but I'm still down for the month.
Okay, so August 5th, yeah, it was a little still tough.
Yeah. So the reason that is right over here.
That's Intel.
This guy right here, because it's such a big weight in the portfolio.
Yeah.
So, I mean, $1, either way is,
Dude, if SoFi just hold on, you have 150,000. If SoFi just goes to like $12, you're gonna have like 2 million on this.
This is an $8 million portfolio.
Yeah.
It's a real big weight, but that's why I'm trying to also like potentially lower these to 100,000 shares, and then play it via leaps, so I can free up some money to balance the portfolio, because I think we've all agreed that, I mean, it doesn't take like a real savvy investor to know that Amazon should probably be in this range already, right?
Yeah.
So where am I going to find the money though?
Right.
That's that. I mean, I can probably do it right here. I've got some cash, right? 1.6. So I could do it that way, but that's not really the way I want to do it. I want to rebalance the portfolio, if that makes sense. And that doesn't necessarily mean I have to close out of SoFi or some of these other companies. I just have to redistribute my exposure, if that makes sense. Just a little recalibration is all. And give myself time, and give myself the opportunity to potentially build a CrowdStrike. We're going to have earnings. They have a very charismatic CEO. We'll see what happens, right? What kind of confidence he instills. And then obviously there's NVIDIA, dude. I'm with the camp that NVIDIA's got 2 or 3 years, and there's nobody, not even Chris Patel, that can talk me out. So, I'm just saying, straight up, dude, my mind is made up, and I'm willing to go down with the Titanic. I don't see how they stop making money. I mean, do you?
I agree. Steve's going to be on the market open or market close today, and he has a lot of new research he found out about NVIDIA. So he's buying as much as he can.
Yeah. Okay. Awesome. Word of the day, brother. I gotta go do husband stuff, dude. My wife says that I've been slacking a little bit, so I'm gonna make her the queen of the universe today.
All right, she deserves it. Word of the day is riffraff, which is a group of people regarded as disreputable or worthless.
So my Wheelers panel is riffraff.
All right, TJ, thank you, man. We all appreciate you. TJ's Twitter. First of all, let me give TJ's Twitter a shout out, because he is working his ass off to grow that Twitter. And 7,000. You were at 6,000 yesterday, TJ.
Yeah, it's crazy, right?
We're seeing some growth. So please make sure to follow TJ on Twitter. And Twitter's a different animal than YouTube. They're both different beasts in and of themselves, but both important to build a brand.
The funniest thing that I hear on Twitter is like, I'll post screenshots of the portfolio, and they're like, nice Photoshop. I'm like, do you realize I trade this thing live? Like, that would be Photoshop on a whole new level if I could figure out how to do that. And I'm just, there we go, fake. And I'm just like, dude, that is like, I mean, obviously it just goes to show that not a lot of people watch, right?
Yeah, well, so people in general are skeptical, and like, I don't blame people for being skeptical, but like, to just immediately like assert stuff, that like, oh, it's fake, oh, there's no way. It's like, well, I guess you can keep being skeptical forever. You're gonna miss out.
Yeah, I've never met a rich skeptic.
That is true. You got to be optimistic.
That's your quote of the day. I've never met a rich skeptic, so I'm sure they're out there. I haven't met them.
All right,
Anyway.
and then real quick, TJ's YouTube. Make sure you guys. He goes live every day as well. He goes deeper into his portfolio, so please make sure you check him out there.
Hey, dude, real quickly, what's going on with Vegas, dude? Y'all are blowing up our website.
Dude, I don't know. So I know a lot of people want to do it. I don't know if I'm gonna be able to do Vegas again this year, dude. I have a busy end of the year. I've got India. That's a lot of shit. So I don't know if I'm doing Vegas. So we'll see.
We have Vegas in September. We're going in a couple of weeks, and then I've got Park City, Utah, and the week between Christmas and New Year's. And then I'm gonna be Jackson Hole and Yellowstone. If anybody wants to join us for my 50th, we're gonna go over there for my 50th in February.
And where is your 50th?
Jackson Hole and Yellowstone. I've never been
to
bucket list stuff. So I want to have my own Fed meeting over there.
Dude, I might join you there. That was fun. No, I would love to do that. That's great.
And then we're celebrating my 50th again. Dude, this is gonna be like a 1-year party. So we're in, I think next June, we're going for 2 weeks to Italy and Greece.
Oh, that'll be fun.
So that's my wife's treat. So, dude, I'm going to order everything, all 5-star restaurants. Dude, I'm going to put it on her. She's the one that said she was treating me. So I was like, I'm going to show her that I'm an expensive date she wants me to put out.
Oh, that's good. That's good. That'll be fun. That's something to definitely do. I'll be in California again in September for some stuff, but Vegas, I don't know, dude, if I'm gonna do it by the end of the year. It's tiring after I come back from India. I can't imagine.
My wife and I talked about it real quickly, dude. I have not been to New York in a while. I used to live there in Brooklyn Heights. I haven't even seen like the new Freedom Tower or anything in person. So, dude, what about doing a meetup in New York? I mean, that is the financial capital of the world. It just
New York
makes a lot of sense, and it's a 20-minute train ride for you.
New York is much easier for me. New York is like.
And it's more appealing for me because I used to live in Vegas, dude. I'm Vegased out already.
Yeah. And New York's fun, dude. I mean, around the Christmas time too, walking around New York is like, and the bars and the restaurants at New York's a good time. You know, Vegas is a different vibe, but
but they both have the best food too.
Yes,
so I mean, everybody's winning on the food. I just can't wait to go to the Brooklyn Bridge again and eat my Grimaldi's pizza. And, the whole deal. Anyway, guys, gotta run. I mean, I appreciate all the love. I appreciate all the comments. I do go back and watch these streams, and I get a lot of feedback from you guys, whether it's good or bad. I take it to heart, and y'all help make me a better person and a better wheeler. So thanks so much, guys.
I love it, TJ. Thank you. See you next week, and have a good weekend with the wifey.
All right, brother. Y'all take care. God bless you guys.
Yeah. Bye-bye. All right, folks, 32 Dolores on Palantir, and it's not giving it up. It's still there, 32.20. 32.20. All right, what do you guys think? You guys think this is overbought? You think this is FOMO? You think this is too hype? Or you think this is like kind of what it is supposed to be doing right now? Do you think, what do you think? Is this 32 fake? Is it going to go away? Is it going to fade out? How do you think about it? How do you think about it? In terms of a meetup, yeah, guys, I don't know if we're doing a meetup this year. Maybe 2025, I think there's a better chance for a meetup. But that India trip is it's going to take a lot in October. And then to have the energy to do a meetup in November, December. So June, I know you're in the chat. I do not know if I'm going to be able to do a meetup at the end of this year. If I wasn't going to India, I would say yes. But dude, India's a lot, bro. It's a lot of time. And it's a lot of energy to put there. So if I had $7, NVIDIA 123. So I think meetup is more so in 2025, and I kind of just don't want to do Vegas again too. Like New York, I would love doing New York because I'm here, A, so I don't have to travel too much, and B, like, New York's a good time outside of just Vegas. But I also want to see where you guys are, because if you guys are closer to New York or closer to Vegas or somewhere else, that would be easier as well. What does he mean? We will be having a meetup. You just won't be there. Hey man, if you guys want to meet up, have a great time. Have an absolute great. Yeah, I don't need to be the one there, but it's tough after India. Like, cause I remember India a couple years ago. It's like a lot, dude. It's like a lot of just energy, and it's tough to just wake up the next week after and go travel again. Especially because I'll be traveling in September, so kind of just want to not travel too much at the end of the year. Robin in 1970, Palantir 32.25. So it dipped right back below 32, and now we're right back above 32. So, I mean, a $32 close would be absolutely incredible today. Absolutely incredible. Let me see the resistance right now. 32. So at 32.50, there's 40,000 shares. And at 33, dude, there's only 26,000 shares at 33. Like, there could be a chance. I don't know, 33 is kind of pushing it, right? But there could be a chance. There could be a chance. If we break 50 within 6 months, I will personally host the huge Vegas. Yeah, if we're 50 in 6 months, we're definitely doing a Vegas meetup because we got to celebrate some of those gains there. Dude, 50 in 6 months would be crazy. The way, like, again, there's a variety of scenarios for how this plays out. One of the scenarios is Q3 earnings are not the best, and Palantir falls to 26.27 and consolidates there to end out the year. The other version is Q3 earnings are great, but Palantir is still too like toppy, and so it doesn't get that much of a bump by the market. And when I mean Q3, I don't just mean Palantir, I mean like the whole market. And so it kind of settles into like 29 to 31. The other scenario is we get a rate cut, we get a Trump presidency because the market wants Trump. It's just objectively they want Trump, and then you get a monster Q3 earnings, and this sucker just takes off because the whole market melts up to like 6,000 on the S&P. Like that's when this thing gets crazy. Now, how sustainable is that? I don't know, but that is definitely a massive, massive move that could happen. And then if the AI momentum just keeps going, I know it's a euphoric day, and like we've been through the red, and so we know what it feels like when because AI sentiment was down in August, like when Nvidia was like I mean, you know, you had people saying, well, AI is just not a real thing, and like obviously that's not true, but when sentiment, you know, prices reflect sentiment a lot of times, and so if the sentiment gets killed, then it also hurts Palantir, obviously. But if that sentiment doesn't get killed, maybe we just head in higher. I think if we end the year at 35, that's not crazy. That's still not, that's 100% year-to-date return. I think ending at 26, 27 is like very healthy. Ending at 35 is aggressive. Ending at 30 is a sweet spot. Ending at 40 is just like the entire market did amazing. And that is probably what we're going to see what happens. Dragos, thank you for the $10 super chat. He says September 6th, S&P inclusion institutions are loading up. The future is bright. So that's the part where I also agree. The future is very bright. And this is why, like someone on Twitter just now posted they sold all their Palantir. Let me show you the post. And I'm a little confused why, dude. He sold it at 31.90. So this guy sold 600 grand basically of Palantir, 31.90. He said, breaking news, I've just sold all my Palantir shares at 31.90. Still very bullish, but I feel like it's getting frothy at the moment. I'm not saying it's not getting frothy. I'm just saying all of them, bro. Dude, at 17,000, like you just like you're gonna want to have to get a really good entry. Like you're gonna need a good 30-40% pullback, which could happen. But if it doesn't happen, then you're gonna be chasing this thing as it runs up to 40. And so it's nothing's wrong with taking profits, but if you're not taking profits because you like need to pay rent, you're just doing it because, well, it's gonna come back down. I don't know, dude. It hasn't that strategy has not worked out for the past year at all. So I don't know if that's the best strategy. 32.10. Now, granted, could it come back down to 24? Of course it could, because even at 27, 28, it's getting up there from an expensive perspective. However, and I sound like a broken record, but the street believes the growth will justify the valuation, and if that S&P inclusion happens on September 6th, this might be the pre-rally before that. Now, it could be a sell the news on September 6th, 100%, but it could also just be a normalized $30 stock. Maybe it falls from 32 to 29 or 30. But the street's like, all right, we're in at 32. ASTS, by the way, is down 9%. Where's Rocket Lab? Rocket Lab is still up 20%. So Rocket Lab going inverse of ASTS. Rocket Lab doing amazing. But I think the street also, can just feel, all right, it's a $30 stock. We're buying it at $30, and it is what it is. I don't think this is the moment where you sell, dude. Like January 2021, when the stock's at 45, yeah, you're a genius and you sell because the whole market's stupid. But the market's not stupid right now. Interest rates are 5%. If you're a company that's going up right now, it's because you're proving to the market that you matter. There's no SPACs. There's no like IPOs. Like there's the excess of liquidity is real, which means good capital is going to good companies, in my opinion. There's $6 trillion in money market funds. So like expensive, yes. Overvalued aggressively, I don't. And so I don't know what's the logic on taking out the entire. I mean, if you have a 2-hour lunch day with Warren Buffett, do you think you're able to convince him to buy Palantir? Yes, I would. I wouldn't be able to convince him, but I think I would definitely make it a compelling case. He'll never buy Palantir because he just won't buy Palantir. He doesn't buy tech. But I think I could put up an argument. I think I could put up an argument if I was sitting with Buffett, and maybe the argument's convincing. I just don't think anyone. Buffett has missed out on tech completely for the past 20 years, outside of Apple. And Apple, he doesn't even think of as tech, even though Apple is tech. So Buffett has missed out on everything technology. The one he bet on was Snowflake, which obviously we saw what happened. There's no way he's going to buy Palantir. There's no way he's going to think of Google, Amazon, any of those things. You know, I was watching that interview with Buffett and his TED Comms last night because the dude who sold Snowflake, and basically they were kind of answering why they don't engage in tech. Let me see if I can pull that up. They were basically just like, if we can't predict the business, then we're not going to buy it. And it was funny to me because I'm like, really? That's the reason Berkshire hasn't bought tech? Because you can't predict the business? Is it that hard to predict Google's trajectory? Let's not even say now. Let's say in 2012. Like, yeah, you have to take a little bit of a risk. You have to take a little bit of a leap of faith. But is it that big of a leap of faith to see network effects expanding monumentally, to think that YouTube's going to be one of the biggest media platforms in the world? I don't know. I don't think so. So it's interesting, but that's kind of how he came to that conclusion. This is the guy, TED Comms. This is the dude who this is his investing approach. This is how he thinks about investing in general. Oh, it's Todd Comms. Sorry, Todd Comms. And again, this is the CEO of Geico and the guy who bought Snowflake for Berkshire.
And I'll start with you two on this.
Go ahead, Ted. Okay. Well, I'd say that it's investing is all about turning over a lot of stones. And the way that I spend my day is just reading annual reports, transcripts, Delta reports, regulatory filings, channel checks, anything I can get my hands on, really, trade magazines, etc. And so 99% of what you look at, you can dismiss within 5 minutes.
What's the magic thing that tells you there's no way that this is something?
Well, there's kind of a, Charlie talks about mental models and so forth. There's a lot of things. You think of it like a gating analysis or a flow chart. There's a lot of things that come along. Obviously, valuation being one, being able to understand the business. Technology is an area sector that I traditionally haven't done much in because I think it's very hard to know what a lot of those businesses will look like 5 years from now. So
that's his bear case on tech. He's like, I don't know what Apple looks like 5 years from now or Google or whatever. It's easier to know that people will want catch up in 5 years. I agree with that. But the risk to reward on that is horrendous, dude. Like, you got to take a little bit of a risk, but to think that people will want catch up in 5 years, therefore we got to buy Kraft Heinz. Like, I don't understand that philosophy as deep. Now, obviously Berkshire, they've done very, very well, but to ignore technology on that basis is just such an interesting way to think about investing.
A lot of things as you go through this gating process that just completely eliminate it. And if you know that you can't get comfortable with it, you don't need to spend any more time on it. So it's the 1% of ideas that are really exciting that it's kind of like a needle in a haystack. You just know when you've done.
He meant to say hay in a needle stack, but you guys get his point. Dude, I heard this last night. I just started smiling so hard. I was like, my term seems to be getting used a lot more now.
This long enough when there's something there. And that's really exciting because if you love investing, that's what you can spend the next 500 or 1,000 hours on, really digging into.
500,000 hours.
Somewhere in that ballpark.
How much do you read every day? Because didn't Warren tell you at one point that that's the most important thing you should be doing?
Yeah, when he came to Columbia and spoke to the business school in Professor Bruce Greenwald's class in, it was either late 01 or early 02, the very last question that was posed to him was what his secret was. And he had this, never forget it, he had this giant pile of paper and he pulled it out. It was a complete hodgepodge and said that he reads 500 pages a week. And anyone can do it. And, it's like compound knowledge. If you start today, it would just build over time. And so that's when I started. And so it's somewhere around 500, sometimes a little bit more pages a week. And that can be all those things I mentioned before, annual reports and transcripts and regulatory filings and so.
So I agree with that part. Reading is very important. I mean, I've noticed as an investor as well that I'm reading a lot throughout the day. I mean, I'm reading Palantir just below 32 right now because for the market open and market close, I need to condense a lot of information and read and be able to talk about things. But also if I'm curious about anything. I need to read. I read a lot of the transcripts from earnings calls after they're done because I don't have time to listen to all of them. So I like go through them. I'll command F certain terms and I like try to get a gauge of that. But reading really does just broaden your horizon so much. But I'm surprised that the dude does so much reading, and then he's like, "Yeah, tech is hard to predict." Like that's the one thing about Berkshire I never understood. It's they're so ideological against it. Someone says food is chemical manufacturing. They own land in countries for political measures, old money that lasts 100 years. Therefore, food can be a good investment. I don't disagree with that. The risk to reward is not there on ketchup. It's like there's a lot more, a lot less risk and a lot less reward, obviously. And obviously Berkshire has survived because they have a group of investors that they take this value investing conservative approach, which nothing's wrong with that. And that beats growth a lot of times. It's just, I got to show you guys this stat. If you do engage in growth, it has to be because you can see beyond the horizon and see that growth is coming. And based on his analysis, he's like, well, we just can't predict growth. And I'm like, I just don't buy that, dude. Like, what do you mean you can't predict growth? Like, it's not crazy to see that like Twitter is growing users every day. So the overall revenue should compound as they get more user engagement, which means that they should be able to convert more subscribers. Like those things seem like the most predictable versus the least. Obviously, food is more predictable because everyone needs food and insurance and stuff, but still, it is hard to imagine that there's no growth at all. Here's the stat I want to show you guys. Let me see if I can pull it up real quick. It's a stat about hedge fund managers versus the QQQ. And I thought it was such a good stat because it kind of justifies. Yeah, look at this. Look at this. This is an amazing stat. There is literally no reason to put your money into any of these fund managers versus buying the QQQ. So let's take a look at this. Warren Buffett versus the QQQ. 1 million invested in 10 years ago, 2014, would be 2.5 million today in Berkshire Hathaway. In QQQ tech, it'd be 4.2 million. So the NASDAQ destroys Berkshire Hathaway. Then Bill Ackman. You put 1 million with Bill Ackman, you get 2.2 million. The NASDAQ gets, again, 4.2 million, destroys Bill Ackman. And you have to pay management fees. Dan Loeb, third point. You put 1 million there, you get 2.8 million. Again, QQQ destroys Dan Loeb. Ray Dalio, you put 1 million, you get 1.8 million. QQQ beats him. David Einhorn of Greenhout, you get 1 million, you actually decrease to 800,000. QQQ beat him. Seth Klarman, you put 1 million, you get 2.3. QQQ beats him. Paul Tudor Jones, 1 million gets you 2 million. 4 million on the NASDAQ beats him. Jim Simmons, Renaissance Technologies, 1 million gave you 2.5 million. 10 years later, the QQQ beat him. Again, there's all of these guys, George Soros, John Paulson. The NASDAQ beat all of them. So it's kind of crazy, dude. All these managers that get paid so much in terms of, they have such a public performance and, they're treated as these like hedge fund celebrities. You could have just invested in tech, just the NASDAQ, and outperformed them by 2x, which is insane, right? That's like legit sane. So, and again, in 2014, when that interview was from, that's when tech was really beginning to explode. And that's when, a lot of people either made their bets on tech or they didn't. So my point is just to say, I do think tech is less predictable, but I think the upside is greater. And then the question just becomes, at least for our next decade, is AI as big as we think it's going to be? And that is hard to predict, but it's also kind of not hard to predict. I still think there's a lot of nuances to it. But if it is, then there's going to be, a decent amount of winners. Amit, when you get to 10 million, you will care much more about downside risk than capturing maximum growth. I agree, 100%. When you get a lot of money, it's about keeping that money, right? The famous Buffett rule, don't lose money. And then the number 2 rule is look at the number 1 rule. But these guys are managing hundreds of billions, and they also need to produce returns. And if the returns are not beating basic indices, then you ask the question, why are you managing that much money, right? Like, what's the point of having that much money at the end of the day? And it's less about, again, even beating the indices. It's more so about just missing something that created trillions of dollars of prosperity, which is technology, from 2014 to 2024. It's like completely missing that outside of Apple, which is the reason Berkshire has performed. Like, the reason Berkshire is even competitive with any of the other indices is because of Apple. It's not because of American Express or Coca-Cola or Chevron. It's because of Apple. So it's like, you would think the only reason Berkshire is even up in the past 5 years is because of technology. that they would appreciate more technology, but they just don't. And they still, the entire organization is still a bit more ideological against it. But I agree. Protecting the downside risk is obviously very important as well. SEDG, SolarEdge. What do we have right there? SolarEdge 24.45. Well, the solar ones have not done. Oh wow, look at SolarEdge, $11 to $3.98 in 2021, down to 24.20. I mean, it looks like Enphase. Enphase has been catching a little bit of momentum. It's down 1% on the day. Yeah, it's basically Enphase's chart. Enphase was at 340. If you bet on solar over the past year, your portfolio has gone down or been flat. Solar has not been the thing to bet on. It was AI. It was not solar. So I think solar eventually will get momentum. But again, now if people aren't buying EVs anymore, the momentum for them to buy solar is also dissipating. Obviously, rates are high. So solar's just not been the exciting play. And I don't know what gets people really excited about it until we cut rates by like 300 basis points. Like, I don't think anyone's going out there to be like, I have to get solar panels on my roof, especially with inflation being, still moderately high. I think people care less about that. But I guess we'll see again in the next coming months as well, kind of what happens to tech. NASDAQ right here at 473. And I don't want to make it come off as if I'm saying like Berkshire is not a good, company or they don't know how to invest. Like no one is in their right mind to have the audacity to say that about Buffett. It's just a broader observation about them dismissing technology for the unpredictability of it versus the predictability that a lot of other people have been able to engage in easily analyzing it, and then the risk to reward on betting on that or not betting on that. And maybe there's a day where Berkshire changes and you see them load up on Tesla or something to take a big bet. The thing is about Berkshire, if they bought Tesla, it would be such a vote of confidence on Tesla that they would start getting so much more momentum and get other people to buy into Tesla. Like they would artificially push more momentum because so many people follow Berkshire. Let me actually show you guys that clip with Berkshire talking about Warren Buffett talking about his Apple purchase when he bought it, because he talked about why he got into it originally and what was the point of him getting into it. So let me pull up that original clip of him buying Apple. Let's see if I got okay, here's the one. Well, there's two clips. Let me play the first one and then we'll play the other one on this. Okay, so here's him talking about why he thinks it's one of the best businesses in the world.
Our businesses do and what we get to add in the way of businesses over time. And we can add them through marketable securities. I mean, we own 5.5% or a little over % of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance and the railroad. So it's our third largest business.
Yeah, it made the point that it was bigger than your biggest acquisition, Precision.
Oh, sure. No, it's our third largest business.
Since a little before the election, maybe, because we were maybe 20 billion even.
$20 billion? You're just counting the billions in your head as you sit here doing this?
Well, I was, yeah. I quit when I got to 20.
And why now? Again, is there a reason for this, or is it just you look at individual stocks that you wanted to own and you bought them?
I absolutely look at individual stocks. It has nothing to do with the Federal Reserve. It has nothing to do with the election. As it does have, it would have something to do with interest rates if they did something extraordinary. It hasn't had, because they haven't changed that much. But there just were a couple of things I wanted to do, and we had the money, and I like investing, and I would much rather have that 20 billion in these companies. And I don't look at it as being in stocks. I look at it as being in businesses. It's just small pieces of businesses. And I would so much rather have that than have the money in treasury bills, which is my alternative.
Not somebody who's ever bought Apple shares, correct?
No, I've never bought Apple.
But
I wish I had. Oh, I don't know that much about Apple. I mean, all I know is Apple is an absolutely phenomenal company. I mean, think of where they were 10 or 15 years ago and where they are now. And that's been done by innovation. I mean, and I think Steve Jobs has had a whole lot to do with that. And, so I saw him just a few times over time, but he called me, did call me a couple of years ago. It was an interesting conversation because I hadn't talked
He's talking about Steve Jobs there.
to him for a long time. And he said, we've got all this cash, Warren. And he said, what should we do with it? I would use it for acquisitions if I thought my stock was undervalued. I would use it for repurchases if I thought my stock was undervalued. And I said, how do you feel about that? The stock was around 200 something. He said, I think our stock's really undervalued. The chances of being way wrong in IBM are probably less, at least for us, than being way wrong with Google or Apple. But that doesn't mean that the latter two companies aren't going to do, say, far better than IBM. I mean, we wouldn't have predicted what would happen with Apple 10 years ago. And I do not get to the level of conviction that would cause me to buy them. But I sure as hell wouldn't short them either. I don't own any Apple stock, and I haven't.
All right, so 2016, this is when he starts buying.
We bought a lot more Apple after year end. There's one of the fellows in the office has about 10 million shares, and I have for Berkshire's account about 123 million. So he got about 133 million. I was wrong on, at least I felt I was wrong on IBM. Now I may have been wrong when I sold it to him, but I certainly was wrong when I bought it. And I felt that Apple has an extraordinary consumer franchise.
All right, so essentially Berkshire, says, hey, the consumer business is what's rolling. Palantir, by the way, back to 32. It was just at 32 a second ago. And that is what justified a lot of the momentum in the context of Apple. But they really didn't follow that up with any other tech purchases since then. I don't know. It'll be interesting to see, dude. It'll be really interesting to see over the next few years where Berkshire goes. Now, Berkshire's performance compared to the other guys is like exceptional. I mean, Berkshire versus ARK is like, and I think that's the thing. I think Berkshire never wanted to become ARK, which is why they always were so hesitant to get into the growth thing. Because like ARK is the worst of the worst when it comes to tech investing. And I think Berkshire felt that Google and Apple could become Roku and Zoom. Now, you had to have a little bit of insight to see that wouldn't happen, but you can't blame them for feeling, hey, maybe this could turn out really bad. And ARK has been a disaster. And so that's why, they wouldn't want to feel like that. So Berkshire right here is up 121% over the past 5 years. QQQ is up over the past 5 years, 155%. And then ARK has just, the past 5 years, it's down 2%. And we've had a raging bull market. So I think they just never wanted to be ARK. But, big tech ended up not being the ARK names. Big tech ended up being some of the best names in the world, right? All right, Palantir is basically sitting at 32. Let me see where the resistance is here. Yeah, you're getting a lot more selling pressure now in Palantir. I can notice it in the order flow at 3201, 3202. You have thousands of shares being ready to be sold. So people are definitely flipping it at 32. You would need a lot more volume to break through to 3250. And if we don't see 3250, it's going to be hard to get there. Imagine walking into any building in the world with the mindset, I could buy this place today if I wanted to. Yeah, I mean, that's how rich he is. But again, that comes with a lot of responsibility. When you're managing that much money, it's also a question of not trying to lose it, right? And Berkshire's had some bad ones. I mean, they've admitted Kraft Heinz was not good. They've also admitted Paramount, they messed up on that one. But their wins are just way better than their losses. Alibaba also didn't work out for Munger. I think that was the last big one that he really went for. But that one didn't, go as strong as they thought it would be. Even though he wasn't wrong for buying it. It was obviously undervalued. It's just the China stuff is what hurt them. They do have 277 billion in cash though, bro. Like that's a lot of money. And so that's the reason we're even talking about Buffett right now is like, what is he going to do with that money? Is he going to put it into tech? Probably not. Is he going to, go deeper into Kraft Heinz? I don't think so. I think he's going to take some different risks, but it's the question of like what risks are out there that are really attractive to him at these valuations. Maybe it's furthering in on Ulta Beauty, right? Or something like that. Like, I guess we'll really have to see kind of where that goes. By the way, the Nikkei index is up. So let's get a little update on international markets. Nikkei index is not doing that bad in Japan, which has also been really good over the past couple of days.
Markets here in European stocks trading mostly higher in what is set to be a winning week for the region. There you're seeing the only laggard here is the FTSE down by almost 0.5%, but the DAX, the CAC Current, Spain, all higher a bit. Investors are reacting today to fresh retail sales data in the UK, which posted a rebound from June's 0.9% decline. Sales actually grew by 0.5% in July, about in line with expectations. And sales volumes also up 1.1% in the 3-month period to July. We're seeing some currency action as well. The British pound moving higher against the dollar off the heels of some cooler than expected UK inflation data earlier this week. It's the highest level for the pound in nearly a month. And finally, we're watching the Nikkei, the index up more than 3%. Japan stocks are rallying on strong retail and inflation data out of the US this week. On the week, the Nikkei is higher by 8.67%. Right now, you're seeing it higher by 3.5%. But the weekly gain, it's the highest since April 2020.
Important to take note of, especially.
So global markets are doing well. Citadel did buy more Palantir. Let's actually go through that right now. I said I was going to go through this. Let's do that right now. Citadel buying, though, I don't... So I'm a little confused on that because Citadel is a market maker along with being a hedge fund. And so them buying Palantir, I don't know if that's because they just like when BlackRock and Vanguard add shares, they have to, right? Because they have to provide that liquidity. It's not because they necessarily want to. So I think Citadel buying is not like a big piece of news, but yeah, that is true that they did buy shares. So let's go to Palantir. Stock right now is at 31.94. Let's look at the 13F, 13G. So we're going to filter this by new positions and we'll do change in shares. So if you look at it from this perspective, Norges Bank added 11 million shares of Palantir. Deutsche Bank added 3.7. Westfield Capital Management added 4 million. These are the big ones in Q2 that have just been filed 2 days ago, August 14th, showing their disclosures. So those were the main one. Those three added a couple million shares each of Palantir. The rest of them are adding in the hundreds of thousands range when it comes to Palantir. So you are seeing some decent growth in terms of the institutional side, but it's just not enough for Palantir to even get to 45% institutional ownership. That is the problem here. And that's why we might not get into the S&P 500 because they're really stringent upon that. Now, if we looked at closed out, so these are the companies that closed out their position and took profits. Coatue Management, Two Sigma, Cube Research and Technology, Capital Fund Management, a fund in Hong Kong. They all pretty much got rid of their positions. The biggest one was 7 million and a couple other $4 or $5 million share positions. And then if you go to reduced, we'll also see right here, Peter Thiel sold 14 million. This one, I know Thiel has to sell whenever, but if he just waited until now, he would have made an extra $140 million because he sold at 20, stocks at 30, 32, sold 14 million shares. So if he'd waited until now to sell those 14 million versus when he sold it, which was, I think, end of December, it would have made a little bit more money, but still has 148 million shares. Renaissance Technologies sold 7 million. Millennium Management sold 7 million. And then you got a bunch of people here. Citadel, again, sold 4 million, but they probably added more on the other side. Again, they're more market making, so I don't think that matters too much. But you did see a decent amount of decreases. So all of this to say, the stock is up a lot this year, even with all this institutional selling, which means either the buying on the institutional side matched some of the selling and we have a better institutional float, or the site is called Whale Wisdom. I'll put the link in the chat. Or retail, Palantir back at 32, is what created the liquidity for the hedge funds to exit. And now retail is holding not a bag, but a very potentially expensive Louis Vuitton handbag. Not an actual bag that you're sad to be holding because the stock has gone up, right? And if the stock was down from now, then yeah, retail will be holding it back. So I think we'll find out when we get broader institutional ownership numbers in the next few weeks where this is going and if Palantir has more retail versus not. And if the institutional ownership ended up going a bit higher. Shout out to Vince in the chat. He said, hey, Amit, have you seen Rocket Lab? I have, Vince. Congrats to you and Matt. Rocket Lab of 15% on the day. Very exciting stuff. So for any holders of Rocket Lab, congrats, because it's a great day for Rocket Lab. It's been a great month for Rocket Lab as well. Can we invest in Citadel? No, I think Citadel one day will want to go public, but I was actually reading a piece on Ken Griffin last night. They had the best returns in 2023. And think about this, guys. They had a return of 15% in 2023, which was the best out of all the hedge funds. But a lot of people in retail, you could have just bought Palantir and did better than 15% last year. So hedge funds are managing so much money and they're hedging to the up and the downside, and they're playing with fixed income, commodities, foreign exchange, all this stuff, currencies, and they ended up with 15%. So it's kind of crazy that they accumulate all this money from all these investors, and the goal is to trade it for them to give them a return. And they're not really breaking these monumental. There's not 50%, right? Because at the end of the day, when you have that much money, it becomes harder to manage it. Same thing with Berkshire, ARK, etc. So that's why I thought that stat on QQQ was so interesting, because literally, if you just didn't care and you just bought the index tech, you outperformed dramatically pretty much all these fund managers. And Jim Simons is the one that is really compounded aggressively when he was managing Renaissance for 30 years. I think it was returns of 30 to 40% a year, some crazy number, compounded. But the current manager, Bill Ackman, dude, Bill Ackman's fund is down 4% year to date. Let's go to Pershing Square. He is not. I think it's either up 4% year to date now. Maybe not down 4% year to date. I think he's up. But 4% is what are you paying Bill Ackman for, bro? Literally, what is the value? No, sorry. It's not, they're not up 4% year to date. Bill Ackman is up 1.7% year to date. There you go. That was end of July. It's probably up more in August because August has been better. But dude, that's kind of wild, right? If you're an investor in Pershing Square, you got to be in a raging bull market, your Pershing Square stock is up 1%, 1.7%. So it really goes to show, this is why I don't have any inbuilt incentive to become a fund manager either. Because when you raise that much money, the stress that you have versus just having a couple stocks that you maybe running the wheel on those couple stocks, investing in tech in the index, it's such an easier job than raising $100 million and trying to generate some massive return that beats the market, because you have to be such a good stock picker or such a good option seller or such a good option buyer, such a good hedger just to be able to beat the broader market, which is why Buffett, I think he had that challenge, right? He would give $1 million to anyone who could beat the market consistently for 12 years, and no one has been able to do this. Vibop says, hi all, with the fears of a dead cat bounce, I'm positioned with NVIDIA and Broadcom till the end of the month and long Microsoft. Of course, I plan to go long on Palantir. Any suggestions? Well, with the dead cat bounce, Microsoft, Broadcom, Palantir, and Microsoft are all going to get hit. Meaning if this is a dead cat bounce and we go back to, Palantir goes back to 26 or the S&P goes back to 520, then yeah, all those stocks you mentioned are not going to do well because all of them are heavily reliant on the market looking at forward growth. So Broadcom's already taken a bit of a beating the past month. Right now it's at 164. It rebounded nicely from that 140 level, but if this really is a dead cat bounce and all this data doesn't matter and the market wants to go lower, then I think a lot of those stocks are going to get hit. So I think the best strategy here is to not hope it's the dead cat bounce and hope that we are in the clear, at least to an extent. Because otherwise, it's going to be a little tough for a lot of those growth names. What do you think about Robinhood? Can I buy it now? Well, this is not advice, but TJ and I did buy 5,000 shares of Robinhood today. I like it under 25. And so, yeah, I like Robinhood under 25. So I like it here. It could go back down lower, but again, we talked about the thesis a lot. We talked about the growth. We read all the analyst reports. We watched the podcast with Vlad the other day. Seems like they know what they're doing and they're headed in the right direction. And the July numbers were incredible, dude. If they keep that up in August, I mean, they're going to have a hell of a Q3. It's going to be cool. Does the fear of a dead cat bounce go away if the SPY goes to 565? Yeah, exactly, Brandon. I think if the S&P, really, my target was 555 on the S&P. We're at 553. If we can close above 565 in the next 2 weeks, I mean, dude, like at that point, we're making higher highs. And as we make higher highs and NVIDIA crushes earnings, like the idea that we go back to 507, what's the catalyst? Again, the catalyst on August 5th was Japan. I don't know if Japan's an issue anymore. And if that's not an issue, then yeah, you'll get a little pullback and tech will sell off a little bit and people will take profits. But to get an aggressive VIX spike like that again, I think it's going to be hard to see. 32.10 on Palantir, back to 32. Not bad. Palantir holding these levels, up 3% again on the day. Palantir this week, past 5 days, Palantir is up 6%. Past month, it's up 12%. Past 6 months is up 31%. Year to date, 93% on Palantir. It's pretty incredible. Pretty incredible. Okay, cool. All right, guys. I think that's it for me. I'll be back at 3:45. We'll have Steve join. He has a lot of DD and stuff to discuss around data centers and energy and what he's been looking at. So we'll get him on the show. We'll get his thoughts on this market. And we'll keep going from there. But 32, man, not bad. Not bad. We hit a high of 32.40. Now at 32.13. Robinhood right here, 1978, up about 1.18%. S&P at 553 going green now. Again, Palantir 32.14. And then the NASDAQ at 474.19, basically flat on the day. All right, that's it for me. I will see you guys at 3:45. We'll keep going from there. Palantir Weekly tonight, I think at 10 p.m. It'll be a fun one. We'll have a lot more stuff to talk about. And we'll keep going from there. All right, thank you, everybody. 32.14 on Palantir. Have a good day. And we'll be back at 3:45 a little bit later today. Bye, everyone. Have a good one.